University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Anne McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CTE in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Vinous. Antonio, tell me, what are you trying to build at Vinous?
Well, at Vinous, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Vinous is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture
because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what there used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to these islands, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And 3, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean, but also
oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future, in coastal areas it's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
one of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, an equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube-sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-Concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-Concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-Concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism dies, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Do you know what today is?
Friday?
Yeah.
Okay. Ding, 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 ding. You got it right.
You get to stick around for 3 hours.
Do you remember
What?
6 weeks ago when AT&T Discovery was announced?
6 weeks ago? I think that was Monday.
Oh,
no?
It was. Okay, well, it feels like 6 weeks ago at this point.
It does. Folks, we made it. It is Friday, May 21st, 2021. Carol Massar, Tim Stenovic in our Interactive Brokers studio, streaming on YouTube. It is quite a week. I feel like maybe it's just me reflecting, but it does feel like equity investors are a little tired.
Yeah, stocks mixed off their best levels. Bitcoin, though, down. And we've got a couple great voices on that, including our interview from earlier today with Mike Novogratz.
Which is a great voice to go to. I can't wait to hear that.
Yeah, we're excited to play that one. Little preview, mentioned the $500,000 price for Bitcoin.
Ooh, I can't wait to see which way he went. Hey, listen, we're also going to talk about world-dominating superstar firms getting bigger, techier, and more Chinese. It's our big take. And how to make a great tequila. Nick Jonas.
That's a good way to end
John
the week.
Barbados.
Good way to end the week.
I had to do the job. Somebody had to take one for the team. All right, let's get you going, though, folks. It is Friday, and we got to get an update on that trading day. Here is Charlie Pellet.
Thank you very much. Happy Friday to you both. Yes, you made it. Let's begin with Bitcoin and that $500,000 call right now. Bitcoin, to put it in context, 37,312. Bitcoin lower right now by 6.9%. It is a mixed Friday here. The Dow, the S&P, they're both higher. NASDAQ on the minus side. NASDAQ 100 index also lower. Russell 2000 up 0.5%. Dow Transports now up 0.4. Stocks resume rising for a second day after investors were whipsawed in part by volatile sold trading in high-risk assets such as Bitcoin amid lingering concerns about the outlook for inflation. Oil rose for the first time in 4 trading sessions. West Texas Intermediate crude up 2.8% right now, 63.67 a barrel. Gold higher a little, changed up 17 cents the ounce right now at 18.77. 10-year yield 1.62%. So again, the equity numbers: S&P up 4, up 0.1%. The Dow up 147, up 0.4%. Nasdaq down 24, a drop there of 0.2%. After earnings, Applied Materials down 1%. Nvidia announcing that 4-for-1 stock split. It is up 3.4%. Deere after earnings up 1.7%. And that, my friends, is a Bloomberg Business Flash.
That's how I like to buy shoes. 4-for-1, Charlie Pellet.
Go.
All right, let's get to the market drivers report. It's Friday.
It is.
And let's set the Business Week agenda. Back in our Interactive Brokers studio is our Bloomberg Stocks columnist and editor, Dave Wilson. Maybe I'm reflecting, Dave. I've been known to do that. It does feel like investors are a little bit tired here today.
Well, things have kind of slowed down in terms of movement. We saw the S&P 500 reach its high of the day, basically in the first half hour of trading. It's kind of faded since then. I mean, let's face it. At this point, we've gotten through really the bulk of earnings for the first quarter. I mean, when you start to hear from the retailers, and we've seen a number of those results this week, we're at that point where the period's ending, because after all, retailers typically are a month behind the calendar in terms of their fiscal periods. So, that's sort of where we are. And then, you look ahead, and the questions about what the second quarter is going to look like when analysts are anticipating even more earnings growth. That really kind of moves front and center. Oh, yeah.
Well, because you have to think about, where we were a year ago. Correct? Right. It's that year over year, right?
Yeah. That's the thing when it comes to the reactions to a lot of these numbers is that, you're going to get these sort of eye-popping increases because in a lot of cases, the business just wasn't there a year ago, especially with the retailers, because, again, end of April, by then, stores were shutting down in 2020 because of the coronavirus pandemic. So if, those stores are opening up again, you're going to do better. The question is how much better.
How you doing there, Stenevec?
I'm just thinking about the retail earnings that we saw this week.
What are you thinking?
Ralph Lauren missed, Kohl's missed, VF Corp down today. What's going on, Dave?
Well, it's exactly what I was just talking about. Now, depending on how you look at the numbers, you saw a lot of positives relative to a year ago, or relative to analyst estimates, but maybe the outlook wasn't so great. You mentioned VF, biggest decline in the S&P 500 by far. The story there is really earnings driven because, they came up short in their latest fiscal quarter, and in terms of their outlook for the year, they're predicting earnings basically matching analysts' average estimate in a Bloomberg survey. And let's face it, you got to come out ahead for investors to really kind of like what they see, and that just didn't happen. So VF down almost 7.5% at the moment.
But it's a little different than what we saw with the big box retailers, and a little different than what we saw with Lowe's and with Home Depot.
But that's the point, right?
Yeah.
We kind of sometimes drop retail in one bucket, but we know that there's multiple buckets, multiple Home Depot buckets.
Exactly.
Those orange,
I love
orange
Home
buckets.
Depot aisles. Exactly.
And the results from Walmart and Target were pretty well received.
Yeah.
On the other hand, Home Depot and Lowe's, not so much, even though, they really benefited not only from people being willing to spend more on their houses, but, they sell a lot of lumber, and those prices were going up, so the revenue went with it.
It's about managing expectations.
You could argue that.
Yeah. Well, listen, I think it is interesting. We're at this funny little point, right? Dave, as you said, we got through earnings. Now we're starting to think about the next earnings. But this is where we hope to ultimately get more visibility from CEOs. This is what we're clinging on when CEOs are saying, well, here's what I'm seeing for the next half of the year. Or maybe they start to even talk about next year, which would be something for investors to kind of hang a hat on.
Yeah, it's a matter of sustainability at this point. Because no doubt the pandemic is going to be skewing comparisons for the rest of the year. Just given the effect it had on so many businesses. And then when you get out of that, what do things look like? How many comparisons have we seen to 2 years ago? Mm-hmm. Because that's the way you really tell how the business looks. Kohl's a perfect example of that. They had growth. But if you looked at like earnings or revenue, it wasn't what it was 2 years ago. And that was enough to get people concerned.
Right. And let's not forget with the retail sector, we know that there's been a shakeout. We know we've been overstored, over-malled, over-retailed. And the pandemic, we've heard it from folks in the retail community and really from many business communities that everything's been accelerated. Like 5 years of moves and thinking have been happening in the last 12
You just have to walk
months.
outside in New York City and see the way that stores have closed, like Bed Bath & Beyond, for example, right? Just in recent months. Dave, now that we are...
Don't get me going on that one and the coupons. It makes me crazy. And the whole trajectory of how you go through that store. There's a thing
You have the
here.
floor plan.
Yeah, and I'm reminded of that forecast that UBS made last month. They were looking for more than 80,000 U.S. stores to close in the next 5 years.
Staggering.
It is.
It is.
I mean, you have to wonder when it stops.
You do. And it comes down to, I suppose, are people going to be willing to make the investment again in, opening up a store or whatever? I mean, given that increasingly consumers are shopping online, given the challenges that companies are facing as it stands in a lot of cases in terms of hiring workers and being able to keep supplies on the shelves with supply chain issues coming up. So, I mean, there are a lot of question marks here.
I think capitalism, a market correcting, kind of mechanism. And when you get overstored or something, at some point, if you let the market play out, it's going to kind of correct itself. Dave's going to be back a little bit later on with his chart of the day. Let's do the bite of the day.
The Bloomberg Business Week Bite of the Day is one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
Today's number, it is, we need the count from Sesame Street, 406 million. It's a big one. According to a survey by Open Fortune, a Fortune cookie-based marketing and manufacturing group, I love this one, at least 146 lottery winners between 2004 and 2021 chose their lucky numbers based on that little strip of paper inside a fortune cookie. Those fortunate souls, Tim, reaping more than 406 million in winnings stemming from Powerball Mega Millions daily draw and scratch-off tickets from 40 states with 93% earning more than 100,000 each. I am changing my strategy.
Who is this written by? A fortune cookie-based marketing and manufacturing group?
No, your source? Is that what you're saying?
Yeah. No, it sounds like I'm reading the cookies incorrectly.
Oh my gosh. Anyway, a fun fact on this Friday. And what's been a crazy week? We're going to talk about crypto. You had a great interview with Mike Novogratz.
It was a fun one. I mean, we talked about everything, including his donations to an organization that works to protect democracy here in the U.S.
I've talked with him about that. It's really good stuff. Bobby Lee is also founder and CEO of Ballet, a multi-currency, non-electronic crypto. So we're going to get to him, too, a little bit later on.
In the meantime, let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. Celebrations have been underway in Gaza following that ceasefire between the Israeli military and Hamas. The director of Gaza operations for the UN's Relief and Works Agency, Matthias Schmeili, says the ceasefire is a welcome development.
I, of course, have to start expressing an enormous sense of relief that 11 days of carnage and war are over, and to express the hope that it will stay that way. It feels like a fragile ceasefire.
Schmeili does say the conflict has come with a severe humanitarian cost. Former President Donald Trump may be out of the White House, but he's been charging the federal government for use of one of his resorts in Florida.
According to the Washington Post, Trump billed the Secret Service more than $40,000 this spring for rooms at the former president's own protective detail used while guarding him at Mar-a-Lago. Federal spending records show Trump's club charged the Secret Service close to $400 a night starting January 20th, the day he left the White House and moved full-time into his Palm Beach venue. While he was president, Trump Properties charged the government more than $2.5 million. In Washington, Ann Cates, Bloomberg Radio.
The White House is enlisting popular dating apps to encourage Americans to brandish their vaccination status in exchange for a better shot at love. 9 of the largest apps are adding badges that show a person's vaccine status and offering perks. In round 2 of the PGA Championship, Phil Mickelson has a one-shot lead at 5 under. Tune in for play-by-play coverage starting at 4:15 Wall Street time right here on Bloomberg Radio. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, folks, you are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic in our Interactive Brokers studio. So This is a story that definitely caught our attention, and it's among the most read. Amanda Gordon, when she writes something, she is among the who's who of New York elite, but sometimes she's in New York, sometimes she's in Palm Beach.
And this is her beat, which she's had to significantly change during the pandemic because these live in-person events weren't happening.
Galas, which New York City is certainly well known for, they just shut down, just like everything else. So just as Wall Street offices are filling up, she writes, New York's high-flying social life is returning with cater waiters, high heels, and all the other wonderful and annoying things about being in person to support a cause. And she's talking about galas. They're back.
Well, they are, but they're
Kind
a
of.
little different, right? So gatherings now are outdoors and they're in smaller groups, but the masks are largely off and safety protocols, though, still in place.
The Central Park Conservancy's legendary hat lunch. This is a big one. It's lovely to see. Took place, though, this time around at several locations on 2 days after its first round-robin tennis tournament and before in-person board meeting of the Women's Committee at the Colony Club.
The Whitney Museum of American Art offered on-site rapid testing and food in individual containers.
Yeah, exactly. I mean, listen, we're all adapting. And so, like the return to office, Amanda writes, the return to gala is not a switch to flip, as most things are not like that. She says many events are still virtual, with venue managers and event planners predicting a big comeback in the fall. And this is what we'll see. I feel like the fall, at least from like Milk It is coming back and expected to be in person. There's just events I think we'll watch very closely in the fall. CEOs that we've been talking at the Bloomberg Business Week event and just on Bloomberg Radio and Bloomberg TV, a lot I kind of feel like are talking about the fall in terms of business travel coming back.
Well, look, you have to remember when it comes to stuff like this, weather is a big part. If things are continuing to be held outside, business travel, of course, notwithstanding. But if we do think about society galas from that perspective, then if things are still looking good and better in the fall, as many people expect them, then we could start to see a return to some sort of sense of normalcy with these events being held indoors.
I'm like craving normalcy.
Yeah, so am I.
Quote unquote. All right, we're just getting started on this Friday. Tim and myself. Stick around, everyone. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Pushing higher. It is a mixed Friday, though. Right to the numbers. We'll give you the why in a moment here. The Dow up 168, higher by 0.5%, bringing its year-to-date gain to 11.9%. S&P so far this year, to put it in context, up 10.9%. Today, the S&P higher by 7, up 0.2. NASDAQ, though, on the minus side, down 17, a drop there of 0.1%. 10-year yield 1.62%. Gold little changed, up just about $1 at $18.78 the ounce. And West Texas Intermediate crude up 2.7%, 63.61 a barrel. Stocks have resumed rising for a second day after investors were whipsawed in part by volatile trading in high-risk assets such as Bitcoin. Bitcoin now down by 8.2% amid lingering concerns about the outlook for inflation. Oil rose for the first time in 4 trading sessions. NVIDIA shares, they're up now by 3.4%. NVIDIA announcing a 4-for-1 stock split. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Hey, one headline, we're going to talk about this later, Tim, is the White House is enlisting popular dating apps to encourage Americans to brandish their vaccination status in exchange for a better shot at love. So,
hey, come hang out with me. I've been vaccinated.
Talk about a new pickup line. Come here often. I got vaccinated. Hey, seriously, though, we know that things are opening up in some parts of the world. We're certainly seeing it in New York City. UK Prime Minister Boris Johnson says he remains confident that England's lockdown will end on June 21st. We're seeing things move forward. We know that there are still, though, some tough situations in some of the emerging parts of the world.
Yeah, according to the Bloomberg Vaccine Tracker, at this rate of vaccination, it's going to take more than a year to get the entire world to a place that would be a comfortable level to immunologists.
That's
when it comes
a lot.
to herd immunity.
All right, so let's get to it. Dr. Ian Lustbader back with us. He's our clinical professor of medicine at NYU Langone. He is on the phone in New York City. Dr. Lustbader, nice to have you here. We were thinking, God, there's so many things we want to ask you, but our David Weston caught up with Dr. Anthony Fauci this week at the Bloomberg Business Week live event, and he's like kind of questioning whether or not we're going to need a booster.
Hi, guys. Happy Friday.
Yeah.
So just to clarify in terms of vaccines, because I certainly, in the hospitals, we do have our little sticker that says we're vaccinated. So that's not a totally crazy idea. And just again, to clarify, if you're vaccinated, if you're with other people who are vaccinated, CDC says no mask requirement needed inside or outside. There still are some businesses who will say you should wear a mask, hospitals, healthcare facilities. So respect where you're going, because people or individual businesses and facilities may say, even with a vaccine, we want you to wear a mask. If you're vaccinated, if you're with someone who is not vaccinated, the risk is low but not zero. It would be kind to wear a mask. Think of the Yankees, right? They were vaccinated, several players and administrators, yet they recovered virus from their nose and screening. So low risk, but not zero. And certainly if you're not vaccinated, yes, please wear a mask and certainly think about getting vaccinated. In terms of boosters, we measure antibodies, and certainly for 6 months or so, those antibodies are high, but they do seem to drop down, and we're not totally confident about T-cell immunity. So it is likely at some point, maybe in the fall, we will need booster shots. And of course, the question is, will we need booster shots that are designed for some of the new variants that are coming out?
Are you guys planning for boosters at NYU Langone?
No. At this point, we really, our vaccines are distributed to us as everyone by the state, and those usually come in through the federal government. So they're distributed to the states and then given out to the individual facilities.
Will you go back and explain T-cell immunity versus antibodies? Because I don't think the layperson has a grasp of what that means, and I certainly don't.
And by lay, we mean Tim and me.
Yeah, me. Explain it to me, really.
We mean us.
Carol knows, because she's asked questions about this.
So, for just in terms of booster shots, we know many vaccines we give out: mumps, measles, rubella to kids, hepatitis, influenza, shingles. We do, over time, can lose antibodies and therefore potentially be susceptible. So we do give booster shots. T cells are a little harder to measure. T cells are the memory cells. They're the ones that when the B cells that make antibodies, and those antibodies, for example, like in the Moderna vaccine or Pfizer, the messenger RNA makes the spike protein. The body says, hey, the spike protein we don't recognize. You form antibodies. And so when the real COVID comes in, your body fights it off right away. Now, those antibodies are around for at least 6 months, we think, both with infection and the vaccine. But over time, they drop. We do think other cells called T cells or memory cells still will be able to call up those antibodies with a little bit of a delay. The actual memory cells, those T cells to, say, the spike protein or COVID, are harder to measure. We do have some tests for that. They're not widely available. And I think most people, would say, that's good, but we want to give a booster to make sure the antibody levels remain high. That's the most secure way, but I think we're learning that even if your antibodies drop, you'll probably be okay.
Are we all going to go to, at some point, like kind of the antibody tests, like to get an idea of kind of where we are, which that data collection might help us in understanding more about the COVID vaccine?
So we're not widely doing that now. That's, not inexpensive. People who've had a shot, 95% have antibodies. You can order an antibody to spike protein. I mean, if someone they have some immune issue, they're not sure they really formed antibodies. We're not doing that because that's another layer of cost on top of things. When you do order a routine IgG COVID antibody, it's usually for people who've had an infection, and those usually stay positive for 6 or 8 months, but often they do drop down, and patients are frustrated, oh my gosh, I went through COVID, and now I don't have antibodies. They probably still have some protection, the T cells, but we do encourage them to get vaccinated.
Dr. Lustbader, what's a realistic way for us to think about, just in the last 30 seconds, how this is going to play out over the next couple of years? Is it going to be just a yearly shot like we get with the flu shot, and then that's it? We're gonna do that?
It may be. I think we have to see what happens in India and other parts of the world, Brazil. If there are widespread infections, as there are, and low vaccination rates, much higher risk of mutant variants, and we may need to develop vaccines every year to those mutants if they can escape our normal vaccine. I think we have to wait and see what happens, but unfortunately, it's a possibility.
That's why some people say there's really no going back to normal because the world has changed because of the virus. Doesn't mean things won't reopen up, but it's going to be different.
Maybe we can just get it with the flu shot.
Yeah, right. I can work with that. Dr. Ian Lustbader, have a good and safe weekend. He's clinical professor of medicine at NYU Langone Medical Center on the phone in New York City. You're listening to Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is Bloomberg Business Week. It's the Friday edition. It's kind of our favorite edition of Bloomberg Business Week. Can I say that? Is that fair?
It is.
Or do you really prefer the Monday edition?
I love every day equally. They're all my children, okay?
You're a liar.
Fridays are great.
Fridays are great. Hey, coming up, speaking of great, you caught up with Mike Novogratz, founder and CEO of Galaxy Digital. He's doing really cool things. He's also looking at the populations that are in prison and trying to find more opportunities, but you talked to him.
It was a really wide-ranging interview, and we're going to play just a little bit of sound in a few minutes about his thoughts on the cryptocurrency slide that we saw this week.
Kind of a timely interview, to say the least. All right, let's get back to your top business stories. Another check on the trading day. What's your favorite day? Is it Monday? Is it Friday?
Tuesday, Wednesday, Thursday, Friday.
That's what I'm talking about.
What is it with you two?
You know, hey, I enjoy what I do. What can I tell you? Let's begin with those crypto numbers. You guys talked about Bitcoin down another 8.2% today, 36,809 right now on Bitcoin. We've got the Dow, the S&P both higher, NASDAQ on the minus side. NASDAQ 100 index also lower, down by about 0.4%. Bottom line, though, here we've got an update, barely swinging between gains and losses on the S&P, up 4 right now, higher by 0.1%. Stocks resume rising for a second day after investors were whipsawed in part by volatile trading in high-risk assets such as Bitcoin amid lingering concerns about the outlook for inflation. Oil up for the first time in 4 trading sessions. West Texas Intermediate crude up now by 2.8%, 63.66 a barrel. Gold up 0.1% right now. That's a gain of $1.66. 18.79 10-year yield, 1.62%. Again, NASDAQ lower, down 30, down 0.2. S&P up 0.1. The Dow up by 0.5. Pfizer and other drug makers have pledged to get more COVID-19 vaccines to poorer countries over the next 18 months, ramping up efforts to battle the coronavirus pandemic. The pledges from Pfizer, Moderna, and J&J made today at a summit of Group of 20 nations. Here in the U.S., life is getting back to normal, but there are still lots of questions about spending time in seats at large sporting events such as baseball games. Stuart Ray is Vice Chair of Medicine at Johns Hopkins Bloomberg School of Medicine.
We don't completely understand this, but open air is an amazingly protective thing, and people still need to be careful about how they get to those seats and how they go from those seats and what they do in the corridors between the time that they're in those seats. But I think that time in the seats is probably not the riskiest thing those people will do that day.
The Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder and majority owner of Bloomberg LP, parent company of Bloomberg News. Checking some of the vaccine stocks. Mixed session today. We've got Pfizer down 0.2%. BioNTech, its German partner, the ADRs down 2.8%. ADRs of AstraZeneca up 0.1%. Moderna down 2%. Johnson & Johnson up by less than 0.1%. Recapping, equities mixed. NASDAQ lower, the Dow, the S&P both higher. S&P up 0.1. I'm Charlie Pellet. It's a Bloomberg Business Flash.
Thanks so much for that, Charlie Pellet. Well, earlier today, Galaxy Digital CEO Mike Novogratz joined me and my co-host Jennifer Zabasajja on Quick Take to share his thoughts on crypto value and regulation. Check it out.
Crypto at its core is about systems change, right? The blockchain revolution, the crypto revolution, is about remaking the financial infrastructure and actually the consumer infrastructure of our country in a more transparent, just, fair way. It came as a response to the 2008 financial crisis. When you talk to the people in the middle of it, they are really revolutionaries. And so I know there's frenzies with things like Dogecoin and Shiba Inu, and everyone gets excited with the kind of gambling aspect of it. But at its core, it's really about rebuilding a system in a way that cuts out the rent taker, right? That is more fair.
So did you buy this dip? We saw a decline of 30% earlier this week.
I bought Bitcoin and Ethereum on the dip.
You did, okay. Kathy Wood was on our air earlier this week. She's a long-term Bitcoin bull as well. She still thinks the price can get to $500,000. What do you see the price ultimately being for Bitcoin?
So listen, I think that's a decent target. If you want to think about Bitcoin in the crypto ecosystem has taken this lane of digital gold, of a store of value. And we have a financial system right now in the U.S. where the old head of the central bank is actually running the Treasury Department. So if you believed in independent central banking, that's kind of metaphorically an important thing to understand. Like, we've lost independent central banking. We have a central bank that is printing money nonstop. And because of it, right, fiat currencies are being devalued and debased. And so gold is rallying. Bitcoin as the new digital version of gold has been rallying. I think Bitcoin will surpass gold in 3 or 4 years. You know, that makes it about 500,000, assuming gold stays where it is. And I actually think gold goes higher. And so how is it going to get there? It's going to get there with more adoption. I was on the phone with the head of one of the largest, pensions in the country yesterday, and they are unbelievably deep in the weeds of Bitcoin. Haven't bought a lot yet, but they're deep in the weeds in it. And so I just see institutions looking at this as a hedge versus, our Treasury Department and central banks' ability to actually get the economy landed with deficits that continue to grow, and a Congress that wants to and maybe should want to spend to deal with the inequality gap that we have.
Mike,
right? We don't have the Tea Party anymore saying stop spending money. We have a progressive party on the Democratic side saying we should have free college. Right. We should really have UBI in lots of ways.
Who is the pension fund?
I can't tell you who our customers are.
Okay, one of the biggest though in the country. I mean, that's a big hint, I think.
Definitely, Mike, you mentioned the Treasury. We also saw yesterday the U.S. Treasury announced that it wanted every crypto transfer larger than $10,000 to be reported to the IRS. Is this a good thing?
Listen, there's going to be regulation that comes down, and the crypto community is going to work in tandem with the regulators to try to get fair regulation that actually helps the industry expand with making sure that the government has the confidence in the system that they need.
That was Galaxy Digital CEO Mike Novogratz with my co-host Jennifer Zabasaj on Quick Take earlier, sharing his thoughts on crypto value and regulation. $500,000, Carol. I asked him the question that you asked Kathy Wood earlier this week.
And he was like, yeah, that sounds about right. I go back to what she said, that there are 19 million coins already that have been minted in terms of Bitcoin specifically, that there's about 21 million, I guess, that are expected. I mean, again, it just goes back to there's not a lot of supply. It's not an endless supply, although I don't understand who determines it and who regulates. Could somebody just open it up and put some more out there? Would that ultimately?
No, it's strict supply.
It's strict supply. So that's basic supply and demand.
Exactly, and that's what Mike McGlone says on air a lot. Hey, the other thing, Ethereum and Bitcoin. He bought it on the dip.
Ethereum has been on a tear.
But Mike Novogratz saying when the slide happened this week, he bought.
Well, and this is the one that they're looking at that maybe they think the established Wall Street community, right, and financial community might be really ultimately interested. It was a story this week, cryptocurrencies. It will, no doubt about it, be next week. All right, you're listening to Bloomberg Radio. Great stuff, Tim.
Thank you. Let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. 70 years ago, a young Army Ranger, first lieutenant, who was badly wounded leading troops on a Korean hilltop, fending off a Chinese battalion, well, he received the Distinguished Service Cross. Today, President Biden awarded him the Medal of Honor. Bloomberg's Irv Chapman has more from Washington.
South Korean President Moon Jae-in arrived at the White House to confer with President Biden in time for the ceremony honoring retired Colonel Ralph Puckett.
The strength of the alliance between the United States and the Republic of Korea was born out of the courage, determination, sacrifice of the Korean troops fighting shoulder to shoulder with American troops.
Puckett went on to earn further honors fighting in Vietnam. In Washington, Irv Chapman, Bloomberg Radio.
The White House is pushing a new reason to swipe right. Dating apps are starting to offer incentives for people who've gotten their coronavirus shots.
These dating apps will now allow vaccinated people to display badges which show their vaccination status, filter specifically to see only people who are vaccinated, and offer premium content, details of which I cannot get into.
The administration's COVID coordinator, Andy Slavitt, says research indicates those who are vaccinated receive 14% more matches than people who are not. Texas Governor Greg Abbott's executive order that bans local governments and schools from requiring masks goes into effect tonight. Entities that defy the order could face a fine up to $1,000. In round 2 of the PGA Championship, Phil Mickelson holds the lead at 5 under. Tune in for play-by-play coverage starting at 4:15 Wall Street time here on Bloomberg Radio. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovec. There's an array of stories when it comes to Bitcoin. It really is one of our major stories of the week. And we're seeing China increasingly come down pretty hard when it comes to cryptocurrencies. Friday, reiterating a warning that it intends to crack down on cryptocurrency mining as part of an effort to control financial risks.
Yeah, check out the chart if you can for this one, because it was just a wild drop. When the largest digital currency fell 6.6%, that was to $37,451. That happened in the noon hour in New York today. A statement Friday after a meeting of the Financial Stability and Development Committee provided the latest blow in what has been a really rough week for the cryptocurrency market, rattled by forced selling and then possible U.S. tax clampdown.
Well, it makes sense. I mean, China is, in terms of privacy, doesn't like anything that may be, and I think this is fair to say, that doesn't like anything that it kind of can't have a clearer picture of, wants transparency, wants to be aware of everything that's going on. Certainly in its economy, among its people, and certainly within kind of its business world, it has long expressed displeasure with the anonymity specifically provided by Bitcoin and other crypto tokens, our reporting team writing about.
There's also a story in Dow Jones making a lot of news today and sort of spreading on social. Bitcoin miners are giving new life to old fossil fuel power plants. So I'm reading directly from Dow Jones here. Across America, older fossil fuel power plants are shutting down in favor of renewable energy, but some are getting a new lease on life to mine Bitcoin. The energy consumption of Bitcoin has been in the news a lot lately because of what Tesla CEO Elon Musk said of late. And this is not necessarily a good thing for the environment, Carol.
Well, and Kathy Wood talked about it. Elon Musk, Tesla's CEO Elon Musk, actually saying yesterday that audits of renewable energy used by large Bitcoin miners could help assuage concerns about the cryptocurrency's environmental impact, writing recent extreme energy usage growth could not possibly have been done so fast with renewables. He was responding to a tweet from ARC's Director of Research, Brett Winton, about the potential that Bitcoin mining has to foster the wider use of solar and battery systems on the power grid. We're going to explore this more. We're going to have to be.
Yeah, but it's not fostering the right thing. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
S&P fluctuated between gains and losses, back in the green once again, little changed, up 2 points, higher though by about 0.1%. NASDAQ remains lower. It is a mixed Friday here. NASDAQ right now down 36 points, down 0.3%. NASDAQ 100 index down 0.4%. The Dow up 143, higher by 0.4%. Stocks resume their advance for a second day after investors were whipsawed in part by volatile trading in high-risk assets such as Bitcoin. Bitcoin lower now by 7.1%. 10-year yield 1.62%. Gold is up 0.1%. Spot gold at $18.78 the ounce. West Texas Intermediate crude up for the first time in 4 trading sessions, up by 2.9%, 63.75 a barrel on WTI. Recapping stocks mixed, S&P higher, little changed, up now by 2 points. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. What a great week, a busy one. Another great new issue of the magazine, something Business Week has done before. The how-to issue is back bigger and better than before because along with it, the actual issue is a Bloomberg Live event called, appropriately so, the Bloomberg Business Week. 5 days of virtual live programming, bringing the magazine to life, a different vertical every day. Here with a recap, Bloomberg Business Week editor Joel Weber in our Bloomberg Interactive Broker Studio. You've had a really killer week.
It was great. And, we tried to, when we were thinking about this, we wanted to pair it with the magazine and basically bring the magazine to life in a way that we had never attempted to do before. So we took the sections of the magazine and basically themed days around them. And then there were little things like the back page, which we called the last thing, became a thing that we did every day. And so it was just a fun experiment. And we got a lot of great guests. We had so much great content in the issue from the newsroom and outside of the newsroom even to do all these how-to stories. So I'm very satisfied with how it all came together.
Well, let's stick on the live event for 1 second because there was so much great stuff from that this week, Joel. And I'm wondering when you think about the names who you want involved, how you come to those conclusions, how you design it, and how you think about those themes.
Well, it really starts with the themes of the day, right? So we started with a business and industries day, and we really wanted to lead into companies there. And then we did tech and innovation. It was like, who would you want to talk to on a tech and innovation day? Well, Kathy Wood would be a great place to start, right? So, so we ended up having, all of these things kind of come together perfectly. And, it just starts with us making a lot of asks of people. And, the other thing that I think really made the event be especially special. Can I say that? Especially special?
Done.
You're the editor.
It's out there. You can say whatever.
Is that it was this combination of live things, some of which were making news, with things that we had put prior energies into. And it's sort of a reflection of what we do in the magazine every week. We have the news stories and we have other things that we put that are still going to make news, but they required some future planning. And so you get this little marriage of the two, and I really liked how that came together in an event. I thought that was special and unique and uniquely Business Week.
Yeah, some of those pieces were just so much fun, whether it's making a movie franchise, right, or making the best chicken parmesan, or it was just, they were terrific.
Yeah, and just to give you a sense of how the Justin Lin one is what you mentioned there, and he's the director of the forthcoming Fast and the Furious 9, and he's directed more than a couple other ones. And that started, Brett Began, who is sort of the editor, who is the mastermind of the issue. He and I, several months ago, started having just weekly video calls with one another to kick ideas around. And we're talking, like, that was in like January or February we started this. And I had just wrapped up watching Star Wars stuff, I think. And I said, what would it be like to do how to make a franchise that doesn't suck, right? Like that Star Wars stuff right now is so good, but we all can admit that the movies were not as good.
Right.
And I said, let's go to Disney and let's ask them, how do you make Star Wars not suck? And Disney politely declined, and that led us to make a couple other asks. And look, Fast and Furious, it has such a cult following. I think that cult following thing is a thing that we infused throughout the issue as well. Yeah. There's several other ideas that hit on that note, and it speaks to like you get a rabid fan base, and you get to make that movie as long as you want to make that movie.
Yeah, exactly.
I love it. Joel, what were some of your favorite how-tos in here? Like, what did you come away with that you're going to do differently?
So there's an art to all the how-to articles in that you want to surprise people and give them something actionable that they wouldn't have otherwise thought of. And so there's some charming ones in here. The how to build a business, online business. OnlyFans. I'm not going to be starting a business on OnlyFans, and the most surprising thing to me was that people are starting businesses that have nothing to do with what you would think it would be about. A woman basically has a whole new lease on life, and she's transitioned out of personal training in person to do it all there. And so I just think that for all the bad stuff in the world right now, and we've all been through plenty, there's this sense of optimism that I think some of these are rooted in, of like, can you make aspects of your life better? So I know that's a roundabout answer for you, but it's all there. I mean, one of the ones that I personally did, I interviewed somebody at NASDAQ, and I said, what's made you a better manager? And she said, well, outside of my job, I have this personal board, and I have different archetypes on this personal board, and I meet with these people one-on-one, and I've had this kind of structure in my work professional life for years, and it's brought it's brought success to my life, my work life. And I just thought that was so phenomenal that you could, outside of what you're doing during your day job, that you can put a structure on yourself that helps improve your how you look at work and career.
I feel like certainly the arc of the week, and also every magazine, what I think is so great is you've got serious stuff that's on the economy, markets, but then you can go and there can be something on, an alcohol or making the best burger, or there could be somebody like Deepak Chopra who's teaching you about kind of how to deal with certain stress of the past year,
Yeah.
how to meditate.
Yeah. So, and I should also mention that we had all this live programming through the week. Multiple times, Carol Masser was a mixologist and mixing cocktails. So
she got some good gigs.
I hope
pretty
that,
embarrassing at it.
I hope that her cocktail game for if anybody's going to Carol Masser's house this summer, like I hope that there's some mean cocktails coming out of that.
Here's
place.
a bottle of wine, guys.
Yeah.
Enjoy.
Yeah, there were a couple times where she left. She had to leave the show early to go and quote unquote work.
Hey.
So there's a surprise and delight element, and I think that's what we try and do in the magazine always is give you news that you need. We want to take you in on big stories that you're only going to get from Bloomberg, but we also want to surprise and delight you with some other content too.
How do you follow this, Joel?
I have no idea. I leave it to you all, but we'll have great stories.
There's a new issue next week, right?
We always do, and we're often planning things way out into the future, and this was sort of the embodiment of that. I mean, to see what we did online, if you haven't seen it, go to businessweek.com. To see all the videos, follow us on social. You can see all those. Like it took months to pull this off, and huge kudos to everybody involved at Bloomberg for helping it all come together.
When do you start planning the next one? How to?
Oh, now? Yeah, I think we'll do a little autopsy and figure out what we'll do.
I love your $2 bill tipping story.
So that one, just so everybody can hear it, because it might be relevant on Friday. This dates back to when I was younger, slightly younger, not that much younger, but slightly younger. Go to the bank on a Friday, buy them out of $2 bills, and that's what you're going to tip your bartender with, and it will be twice as much as the person next to you.
But it's already got me thinking about what I'm going to submit for you for next year.
Okay, all right.
Pressure's on.
Well, you can whisper it to me after here, and we'll see. That way you're not on the spot.
Well, the cocktails that I'll be making at my desk afterwards, you do not have to tip me. I'm just going to say, this time.
I haven't gotten to get the $2 bills, so you're going to be light on a tip. So.
Good deal. Have a great weekend. It was a good week. Bloomberg Business Week editor Joel Weber. Go to BloombergBusinessWeek.com. Check out all the amazing content and the new how-to issue. You're listening to Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I'm Charlie Pellet. We move into the final hour of trading on this Friday, May 21st. Right now we are looking at a mixed market. The Dow, the S&P higher, NASDAQ and the NASDAQ 100 index both on the minus side. Russell 2000 advancing 0.6%. Dow Transports up by 0.4. Stocks mixed, on track for a losing week for the S&P. Investors being whipsawed in part by volatile trading in high-risk assets such as Bitcoin amid lingering concerns about the outlook for inflation. Bitcoin now down 7.3%. Oil higher for the first time in 4 trading sessions. West Texas Intermediate crude up 2.9% at $63.72 a barrel. 10-year yield 1.62%. NASDAQ is down 27, a drop of 0.2. S&P up 5, a gain of 0.1. Dow Industrials up 161, up by 0.5%. As for the economic backdrop, Jim Paulson is chief investment strategist at Luthold Whedon Group, and he says there are lots of reasons to be upbeat.
Went from a depressionary bust to a wartime boom within less than a year. And so companies were trying to survive a pandemic and cut everything to the bone, payrolls, inventories, output, just to be able to survive. And then suddenly they were given a wartime boom. And now and as a result, we're trying to catch up because suddenly we don't have enough labor, we don't have enough shipping containers, we don't have enough homes, we don't have enough chips.
NVIDIA has announced a 4-for-1 stock split. Shares up now by 3.3% after earnings. Applied Materials lower now by 1%. Deere also reporting this morning. Deere shares in the green. Deere running higher now by just about 1.9%. Again, recapping equities trading mix with the S&P up 3, a gain of just about 0.1%. NASDAQ down 0.2. The Dow down 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. Well, Bloomberg Business Week is brought to you by BNY Mellon's Pershing. Insight is virtual and free beginning June 8th. Learn how Insight's content will leave you ready to lead effectively and think differently. Register now at bnymелloninsight.com. This is Bloomberg.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These plants are becoming more and more expensive. You're looking at sort of $15 billion for their entry level.
There have been waves of immigration that have faced a lot of resistance.
There's a lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
Well, the Big Take definitely caught our attention today. It's also one of our most read stories on the Bloomberg about how world-dominating super firms, Tim, they are getting bigger, techier, and more Chinese.
Tom Orlik is chief economist at Bloomberg Economics, and he joins us on the phone from Washington, D.C. Tom, first of all, this is chock full of data, charts. It is an interactive experience. I encourage everybody to check it out at Bloomberg.com. Take us through how you put it together, the analysis that you did to come to these findings.
So what we've tried to do, Tim, is take a kind of grand sweep through 30 years of corporate history. We targeted the top 50 listed firms in the world, and then we pulled data on their financials and their market cap from the Bloomberg terminal and ran a bunch of analysis. And when you crunch the numbers, it tells you a number of stories. So there's a story about a transition from west to east, the rise of the Chinese mega firm. There's a story about the fall of big oil and the rise of big tech. And of course, there's a sort of a bigger story about the big getting bigger. Go back to 1990, and the top 50 firms in the world they had a market cap of about 5% of global GDP. If you look at that number now, it's close to 30%.
That's a big change. And listen, we talk about inequities in our world in general, Tom, between individuals, but we're seeing it also happening within the corporate community. You just laid it out with that stat.
Yeah, and of course the two are related, right? I mean, if we think about the biggest firms getting bigger, we also think about the entrepreneurs who created those firms getting richer. And so the dynamic between the big getting bigger in the corporate sector and the rich getting richer in society at large, these two trends are intimately connected.
Well, and it's interesting, you guys write too, the advantages superstar firms enjoy became all the more glaring during the pandemic. And it's why we saw an Amazon just take off like a rocket during the pandemic.
Yeah, I mean, the pandemic, Carol, I mean, as you know, it was a disaster for the mom and pop store, right? The corner store, which relies on foot traffic to drive revenue. They had a terrible time in America and around the world. But the biggest firms in the world, the Amazons, the Googles, the Netflix, the Facebooks, they have a business model which is almost tailor-made for the pandemic, right? So the pandemic gave them it kind of compounded their advantage.
Where do taxes come into this? Because there's a striking graphical representation in here that shows the median effective tax rate of 35% in 1990 dwindled to only 17% last year. At the same time, profit margins heading in the opposite direction, soaring from 7% to 18% over that same period of time.
Yeah, I think when we think about it, Tim, there's been this grand sort of theme in the global economy over the last 40 years, starting with the Reagan Revolution, which has really tipped the balance in favor of corporations. Tax rates have been cut, and multinationals have become better at kind of shifting their profits around, sometimes in sort of fairly dubious ways, to kind of maximize the benefit of low tax regimes. And I guess a question which comes out of this research and some of the news flow from Washington, D.C. and Beijing is, well, are we now at another moment for the global economy? Is the Reagan Revolution, which tipped the balance from workers to corporations, has that now run its course? And are we at the beginning of a new period where tax rates rise, where minimum wages rise, and the balance starts tipping a little bit more towards workers?
What's also interesting, and we kind of said that coming in or in the introduction, Tom, about the rise or the China rising. We continue to see that, and that is not just in terms of their, impact on manufacturing globally, but it's just the companies they are creating are behemoths. Yeah,
so we've got Alibaba, the Chinese Amazon. We've got Tencent, the Chinese internet giant, a number of Chinese firms which have kind of muscled into the top ranks. And of course, there's an interesting dynamic there as well, because the people who say we need to regulate firms more, right? Corporations have become too powerful. We need to regulate them more. Well, because of the dynamic between China and the United States, the giant firms have a pushback against that argument, right? And we're already starting to hear some of the U.S. superstar firms say, well, if you tax us more, if you regulate us more, if you kind of impede our dynamism, then that's going to make it harder for us to face off against these new Chinese behemoths.
Tom, I want to end with just very briefly something that you talked about a little earlier on Quick Take today, and it was CapEx and CapEx spending as a portion of a company's spending, and as it relates to how many employees it actually has to hire and what that means for human capital.
Yeah, so if we go back to the 1990s, Tim, and we think about the dominant firms then, it's industrial firms like General Electric, it's energy companies like Exxon, and they do a lot of capital spending and they hire a lot of workers. But if you fast forward to 2020 and you think about the dominant firms, it's tech platforms like Alphabet or Facebook, which can really scale without adding a lot of workers and without doing a lot of capital spending. And that's a really important shift in the way the economy works, and something also that central banks and tax authorities need to keep in mind.
It's a really good point, important point to finish on. Hey, Tom, thank you so much. It is the Bloomberg Big Take. Check it out at Bloomberg.com. Tom Orlik, he's chief economist at Bloomberg Economics from Washington, D.C.
Well, speaking of D.C., let's go down to D.C. and get a check of world and national news with Nancy Lyons, who's there. Hey, Nance.
Hey, Tim. President Biden has been paying tribute to a U.S.-Korean War veteran. During a ceremony this afternoon at the White House, Biden awarded a Medal of Honor to retired Colonel Ralph Puckett Jr. for conspicuous gallantry in combat.
He leads from the front. He leads by example. He leads with his heart. He's a Ranger, and that's how Rangers lead. That's how you lead.
Biden says during an Army unit battle in 1950, Puckett intentionally ran across an open area to draw enemy fire. He refused evacuation to ensure the safety of his company. He was eventually wounded by grenade fragments. It was Biden's first Medal of Honor ceremony as president. South Korean President Moon attended the event along with Vice President Harris. Hurricane watchers are keeping their eye on two storm systems that could get the 2021 Atlantic storm season going next week. Bloomberg's Nathan Hager reports.
The National Hurricane Center is keeping an eye on one storm in the western Gulf of Mexico that has a 40% chance of becoming the first named storm of the year. It's set to hit Texas and Louisiana late Friday. Those states have already been getting drenched all week long. A second system east of Bermuda has a better chance of becoming the year's first named storm, 90%, according to the Hurricane Center. Forecasters are predicting up to 20 named storms and as many as 10 hurricanes in all of 2021. In Washington, I'm Nathan Hager, Bloomberg Radio.
In round two of the PGA Championship, Phil Mickelson is holding the lead. He's 5 under. Tune in for play-by-play coverage starting at 4:15 Wall Street time right here on Bloomberg Radio. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar, along with Tim Stenvick. I was just checking. This is our most read story on the Bloomberg terminal in the past 8 hours. It's got a headline of Bill Gates' carefully curated geek image unravels in 2 weeks. It's by our Austin Carr, who writes for the magazine, often writes about the technology sector, and this is his story.
Yeah, I encourage everybody to check it out. One thing that I think caught us by surprise, Carol, it happened while we were on air, was the news that Bill and Melinda Gates were ending their marriage. Mm-hmm. And I think one of the reasons why it surprised so many of us is because over the last 20 years, this image of Bill and Melinda Gates has been inextricably tied to the Bill and Melinda Gates Foundation and the philanthropic work that the two of them have done throughout the entire world. And I think that over the last 2 weeks, and it's a point that Austin makes in his piece, that part of that carefully curated image has come unraveled.
Well, he's kind of like an everyman minus the billions, kind of a populist persona. As Austin writes, he says the populist persona popped on May 3rd when Bill and Melinda French Gates announced that they were splitting up after 27 years of marriage. And it is interesting. I mean, he does have, as Austin kind of reminds us and writes, that an air of kind of down-to-earth dad dorkdom, right? And so I think the split and then some other stories that came out afterwards, and this is all personal information, so I kind of feel like I don't know that we should be commenting too much on it. But nonetheless, it's made people maybe look at him a little bit differently in terms of the image they had of him.
And a point that Austin writes about is the history of Bill Gates and what he did earlier in his career. So Austin writes, quote, "It's easy to forget that Bill Gates wasn't always so publicly revered. During the heyday of the PC revolution, he was the ruthless nerd-turned-tycoon who brutally and profanely berated underlings and allegedly tried to slash Microsoft co-founder Paul Allen's equity in the company while he was undergoing cancer treatment in the early 1980s.
Right, exactly. So this is why it's kind of a deep dive into, listen, we all as individuals, we kind of evolve and progress in different ways.
I should note that Gates has said that his recollection of those events differed from Allen's.
All right, good point. You're listening to Bloomberg Business Week. Carol Massar, Tim Stenvick, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, they're higher. NASDAQ on the minus side. Bitcoin down again today, now lower by 8.4%. Let's head right over to the First Word breaking news desk. Lots going on for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. Stocks trading mixed today with the Dow currently up 188 points. S&Ps are up 6, while the NASDAQ is lower by 24. The U.S. 10-year yield at 1.62%. Gold is up 3, and transports gain 51 points. Among the main 11 S&P sectors, leaders were the financials and energy. Consumer discretionary led to the downside. And leaders to the upside in the Dow, Boeing and Goldman Sachs, while Apple was in the red. After earnings, Deere rose as much as 3.7%. And in other news, Harker said the Fed should speak about reducing bond buying sooner rather than later. And wrapping things up, you mentioned Bitcoin. It plunged intraday after China reiterated it intends to crack down on cryptocurrency mining. Live from the First Rebecca News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. Have a great weekend. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, so it's been quite a week, and I know we're going to talk about this later in Beyond the Bell with our TV team, but we were kind of laughing, but it's not funny that on Monday it was just that AT&T and Discovery did their deal.
I made the joke at the top of the show that it feels like 6 weeks ago, and I just looked for a little behind the scenes. You and I were having this conversation with Paul and Ari on our call, our editorial call earlier today, and I got
our producers.
I got off the phone, and my colleague upstairs was like, "Wait, the AT&T Discovery deal was this week?" Because that's how it feels to everybody.
Yeah, it's just been a dense week. So we had that deal, and then we were doing kind of an all-in on media and content and who's going to move next. There's some speculation about Discovery having to do something, Comcast, NBC having to do something. So we're kind of watching that space consolidation again. We know the last year has shown us how important content is, how valuable it is.
Yeah, it really is, and also what it means for Netflix and Disney. Netflix is, and as the as the company that invented this category, right, more than a decade ago, streaming. Netflix is the early mover and the one that everybody's going for. But Disney, over the last 2 years with Disney Plus, has given it an incredible run for its money. And indeed, we saw Disney stock move lower on Monday after this deal was announced.
Exactly. So we're watching that space. But speaking of good content, if you're looking for some good content, we've talked about this before, the Bloomberg Foundering podcast. A new season 2, got underway last month. It was all about TikTok. The finale is here. This episode getting into the ban of the social media blockbuster by former President Donald Trump, who, by the way, announced that ban on Air Force One. Bloomberg's Mario Parker was on the plane when it happened.
There's about maybe a dozen journalists. I looked around just to make sure I heard them right. Because I wonder if everybody else is freaking out just like me, because I'm already thinking, X amount of miles in the air. I don't have cell phone service. I need to tell my editors, like, what's going on? I'm panicking a little bit inside. And I look around and everybody else has the same look of horror. You know, how long will it take until, I'm looking at my phone. Like, when can I get a bar? When can I get a bar?
Yeah, it's hard getting a bar up on Air Force One, I bet. That, of course, was Bloomberg News. Mario Parker on Air Force One when President Trump announced the banning of TikTok. Let's get more on the latest episode and the finale of Foundering. The host of the Foundering podcast, Shelley Banjo, she's Bloomberg New York's bureau chief, and she joins us on the phone in New York City. Shelley, it was so much fun just hearing Mario talk about it.
Yeah, thanks so much for having me. I'm so excited about the end of Foundering. And yeah, I mean, I didn't realize that you didn't have Wi-Fi on Air Force One.
I didn't either,
That was a new one to me.
In the movies, don't they have some kind of connectivity?
Well, I think the president does, but I guess maybe they don't have it in the back of the plane. I'm not sure. That's what Mara was like, yeah, it's a little known fact, but you have to wait until you land, until you break any news that happens on Air Force One. So super stressful. And obviously, you know, as we go into that night, you know, Trump lays out this specifics on, hey, this thing that I've been talking about, I'm actually going to do. I'm going to ban TikTok, and I could do it as soon as tomorrow with an executive order. And so Mario was the one who broke the story, sent headlines out on the Bloomberg terminal first, and then online, picked up around the world, and then freaking out on TikTok with all these kids being like, where is TikTok going?
I remember that. And my friend who has older kids who use TikTok asked me, what does this mean? They're freaking out. Are they going to not get to use TikTok anymore? And maybe he wants that at this point. I don't know. Shelley, what was happening inside TikTok when this news was breaking?
Yeah, you know, I have some sources who told me that they also had no idea what was going on. You know, everyday employees were saying, you know, they were getting emails from their parents, you know, lower level employees. I mean, getting emails from their parents and their friends being like, do you still have a job? But, you know, even at the higher echelons of the company, you know, our sources said this really took them by surprise because they had been used to the rhetoric from Trump, but not necessarily the action. And so that is what really freaked everybody out.
That kind of back and forth was just such a great kind of almost symbol of the administration on so many different things, and President Trump specifically.
Yeah, and, you know, that's the kind of what's happening, you know, crisis that was, you know, kind of ensued for the remaining, you know, months. Until we kind of knew what was happening. And then all of a sudden it just stopped because Donald Trump contracted the coronavirus. He was out for a number of days fighting that. And then he turned his attention to the elections. And meanwhile, TikTok had no idea what was going to happen to them and essentially ended up pursuing a strategy of waiting him out, keeping a low profile or as much as they could, and waiting for Trump to turn his attention away, leave office. And Joe Biden, you know, took office and said to them, you know, we're going to study this, but we're going to put official hold on all of this, the ban, these core cases that we're going through, the whole thing.
Well, Shelley, and just in the last 30 seconds that we have left, what happens now? Because this episode came out on the perfect day, because it was actually the day that the CEO of the parent company of TikTok, ByteDance, Zhang Yiming, stepped down.
That's right. We're just about to press publish, and we got the news that he was stepping down as CEO. But he is still he's still part of the company. He's going to take a long-term strategy role. But basically, our sources tell us that he's still going to be running the show. He's just really losing the title.
So maybe you have to do one more episode.
Yeah, I was going to say, don't get too excited about being done with this project.
Finale in 2 parts, perhaps. Shelley Banjo, great stuff. Right now, check out the whole arc of the season 2 of the Foundering podcast. And of course, we've been talking with the host of the Foundering podcast, Shelley Banjo. She is Bloomberg News New York bureau chief, joining us on the phone in New York City. Coming up, we got the chart of the day.
Ooh, and the song of the day as well.
Friday's song, always a good one.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Hey, a headline crossing the Bloomberg terminal. Bitcoin's loss extending to 10% in what's been a rough and volatile week. Rough and tumble, Tim.
Wow. Yeah.
Yeah, I was just looking at some of the numbers, and it just crossed the Bloomberg. Hey, in the meantime, we're going to get back to our own Dave Wilson. It is that time of the day for his chart of the day. We're going to bring him in just a moment. He's been looking at the S&P 500.
Also, the song of the day.
Yep.
Special
exactly.
Friday edition.
Friday, everybody wait.
Oh, we don't need a song now. We got Carol singing.
Yeah, I know. I got to just stop that. Charlie Bellet, help me.
I want to keep hearing you sing. I'm
No, you really don't.
Hey, all right. Well, here's what's going. We got to do karaoke sometime. Here's what's going on. We have got the Dow, the S&P, all trading higher right now. Nasdaq on the minus side. Nasdaq 100 down by about 0.4%. Nasdaq Composite Index down 0.2%. The Dow, the S&P, they are both advancing right now. We have got with the S&P up 5, a gain there of 0.1%. The Dow up 180, higher by 0.5%. Bottom line here, 28 minutes to go ahead of the closing bell. Stocks mixed, investors being whipsawed in part by volatile trading in high-risk assets such as Bitcoin. You mentioned Bitcoin, now down 10.1%, all amid lingering concerns about the outlook for inflation. Oil up for the first time in 4 trading sessions. WTI, West Texas Intermediate, up 2.9%, 63.76 a barrel on WTI. Gold, 18.80 the ounce, up by about 0.2%. 10-year yield, 1.62%. California says it will no longer require social distancing and will allow full capacity for businesses when the state reopens on June 15th. Across the U.S., mask restrictions are being eased, but Stuart Ray, Vice Chair of Medicine at the Bloomberg Johns Hopkins School of Medicine, cautions against complacency.
What's being said is you don't have to. It doesn't mean you shouldn't. And we have to think about the most vulnerable among us and what will help get rates low. Right now, we have pretty high rates of transmission still, similar to where we were a year ago. But we have more people who are immune, and when people are immune, they're protected from severe disease, but there are people around them who may still be susceptible.
The Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder and majority owner of Bloomberg LP, parent company of Bloomberg News. Checking some of the vaccine names, we've got Pfizer down 0.3%. They're all trading lower right now for the most part. Its German partner, BioNTech, the ADRs, they're down 3.3%. AstraZeneca's ADRs lower, little change, down less than 0.1%. Moderna out of Cambridge, Massachusetts, down 2.1%. Johnson & Johnson eking out a gain of 4 cents of less than 0.1%. Recapping, on track for a down week for the S&P 500 index. It is a mixed Friday right now, with the S&P up 2 points, little change, up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
'80s, '90s, '80s.
Early 90s.
Early 90s.
You know, this is the best part of being in the studio.
What?
I gotta say, when you look at me, Carol, it's like, what the heck is this?
And I'm really trying not to Google because Dave is right next to me, and I don't really.
That's her
want to
poker
cheat.
face.
But I could feel the I don't know. So
yeah,
who is it?
80s, 90s vibe,
Who is
absolutely. It's a band called Jesus Jones.
Oh, I wouldn't have gotten it. Okay.
Best known for a song called Right Here, Right Now.
Oh, yeah.
But this was also from the same era, called Real, Real, Real. Which seemed particularly appropriate for the chart because it's all about what's real.
Okay.
In the sense of inflation adjusted. You know, when you talk about real earnings, when you talk about
You're
real
speaking
yields.
my language, Dave Wilson.
Absolutely.
You're speaking our language.
Yeah, well, I mean, I do like to clarify these things for everybody else who aren't necessarily speaking quite the same way. But in any case, this is all about looking at the S&P 500 from a real yield perspective, specifically real earnings yield. And when you talk about yields, people tend to focus on dividends, but you can do the same thing with earnings. let's say, the S&P 500 is at 30 times earnings, that can be sort of transposed into an earnings yield of 3.3%. And we're actually just above that at the moment. So what do you get when you subtract out inflation, specifically consumer prices? Well, as of last month, you get a minus sign. You get a negative real yield of about 0.8%. The last time you saw anything like that, December 1980. And back then, it was all about Fed Chairman Paul Volcker trying to tame inflation, which was running away in the U.S. economy. So we live in very different times from this perspective. And it's a comparison that money manager Crescat Capital made in its latest investor letter that was posted on its website the other day. So it definitely got my attention. And if it's gotten your attention too, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So, Dave, is a way to think about this is that stocks are expensive, and as a result, the yields are not there?
Certainly the folks at Crescat would tell you that. I mean, their letter talked about excessive valuations and how inflation should start becoming an issue. And that's their concern, is that once you figure out what's happening to prices, you're not getting enough in terms of yield.
Well, but wait a minute.
Okay.
We know inflation has spiked, right?
Yeah.
So this reading makes sense for the data points, the inflation data points,
right,
based as of late. But to me, you would need to see a trend line of this for several months in a row before you say, okay, wait, this really does say something about excessive valuations. Is that fair? Because if the inflation reading next month or the month after gets kind of more quote unquote normal, then this excessive valuation could potentially go away, or at least maybe not be negative anymore.
I mean, it's a reasonable point. That said, think about where investors are in terms of looking at what's going on with inflation. They're concerned that it's going up and it's going to stay up.
Right.
So, that becomes something to watch for down the line. And you're looking at a monthly chart here. We should point that out. So, you take the end of month figure for the earnings yield, put it up against inflation, which is a monthly figure, consumer prices. And so that comparison makes sense.
Just saying.
Just saying.
Just saying.
Okay, I'm just saying what my stock of the day is. How's that?
You took the words right out of my mouth.
Cullinan Oncology. The ticker is CGEM. Went public in January. Today, it traded at its lowest price since dealing began, you might say. It's still above its IPO price, but its lowest market price. Here's what happened. Their chief medical officer left the company, or is leaving the company, after just about a year.
Kind of never a great thing.
No.
With like a biotech, right?
No, absolutely.
Or possibly
his name is John Wigginton. He's actually going to become the chairman of an advisory board to the company. So he's not going entirely. But, he's just not going to be as active day to day as he was.
Transitions can make investors uncomfortable.
Yes.
Look for Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at @TheOneDave.
All right. Have a great weekend, Dave Wilson. Thank you so much. All right. Let's get back to World of National News. Over to Nancy Lyons. She is in our 99.1 newsroom in the nation's capital. Hi, Nancy.
Hey, Carol. The White House is lowering the price tag on the more than $2 trillion infrastructure plan. Press Secretary Jen Psaki says it is a counter-proposal to Republicans who say the president's initial proposal is too high.
Our team put forward a reasonable counteroffer that reduces the size of the package from $2.25 trillion in additional investment to $1.7 trillion.
Biden has repeatedly said he's open to compromise and welcomes Republican input. Some Republicans, though, have expressed a willingness to support a plan less than $1 trillion. The White House coronavirus team is reporting a continuing decline in new cases and the spread of disease in communities across the country, still with a few exceptions.
The director of the Centers for Disease Control, Dr. Rochelle Walensky, says she understands why some vaccinated people are still using face masks in an overabundance of caution.
Things are improving. Week after week, the number of cases and the level of community risk is decreasing, with more than 60% of Americans 18 and older having received at least one dose, and 126.6 million Americans fully vaccinated.
The officials lauded private companies, now including dating apps on the internet, which are offering vaccination incentives to their customers. In Washington, Irv Chapman, Bloomberg Radio.
In round 2 of the PGA Championship, Phil Mickelson remains the leader at 5 under. Tune in for play-by-play coverage starting at 4:15 Wall Street time right here on Bloomberg Radio. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. This story by our Benjamin Robertson, Charles Daly, and Ruth McGavin. It's about the lack of women set to cost male-dominant private equity more. Private equity, they've got a women problem, and it's about to become a shade more costly, at least for Sweden's EQT AB and the companies that it sponsors.
As part of a €500 million, which translates to $612 million, bond issue priced earlier this month, the Stockholm-listed EQT took the unprecedented step of agreeing to pay lenders a higher interest rate if it failed to increase the percentage of women in its investment team. That's according to the sales prospectus. With women accounting for just 21% of the team currently, it set itself a target of 28% by 2026.
So this is walking the talk, I guess. The move follows former Chief Executive Officer Thomas Van Koch's 2018 claim that firms failing to challenge the status quo on diversity will put themselves at a disadvantage. Across the world, women make up 32% of junior roles and 25% of mid-level roles when it comes to private equity. That's on average, according to a March report from Preqin. That weighting drops to 12% for senior positions.
Yeah, I mean, and you have... In public markets, you have some states and listings places, right? Like the NASDAQ and New York Stock Exchange, that are moving to try to provide an incentive for American companies and companies that list in these places to have a female on the board or diversify their board in some way.
Well, and listen, the research has been out there for years. McKinsey and others have shown that put women on your board, put women in your senior executive positions in the C-suite, that you tend to have a better financial performance. The thing is, if you start tying things to metrics, like that is potentially how you start to move the needle in improving diversity, whether it's women, whether it's minorities. That's how you can maybe change it.
Yeah, and holding yourself accountable in a way that requires you to pay money if you do not achieve that goal is certainly one way to do that.
But this is really kind of fascinating how they're doing it. And it is really part of a bigger trend. It was something ESG that Kathy Wood brought up with me when it comes to maybe Elon Musk and why he made those concerns about crypto and the energy usage. Anyway, check that out at Bloomberg.com.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Charlie Pellet. Stocks are trading mixed right now. 13 minutes to go ahead of the closing bell. This update brought to you by BNY Mellon's Pershing. To learn why Insight is the essential event for the financial advice community, register now at bnymelloninsight.com. That starts June 8th. We're looking at a mixed Friday, on track for a losing week for the S&P 500 index. Bitcoin resumes its decline, down now by 10.3%. S&P lower by 2. Mixed Friday here with the S&P down 0.1%. The Dow up 134, holding on to gains higher by 0.4%. Nasdaq down now by 61. That is a drop of 0.5%. Investors are being whipsawed in part by volatile trading in high-risk assets such as Bitcoin amid lingering concerns about the outlook for inflation. 10-year yield 1.62%. We've got oil higher for the first time in 4 trading sessions. West Texas Intermediate crude up 3%, 63.81 a barrel. Gold is at $18.79 the ounce, up 0.1%. Again, the 10-year 1.62%. Bitcoin now down by 10.2%. Stocks mixed. S&P on track for a losing week. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yes, indeed, everyone. Just about 10.5 minutes until the closing bell on this Friday. So let's get to it. And joining us with a check on the Drive to the Close is Caterina Simonetti. She is Senior Vice President and Private Wealth Advisor at Morgan Stanley Private Wealth Management. And she's back with us. She joins us today on the phone from Philadelphia. Caterina, how are you?
Good, Carol. Thank you for having me on the show.
Well, it's nice to have you here. We were kind of laughing, not laughing, funny, not funny, about what a crazy week it's been. I mean, listen, the markets have just been kind of all over the place. Volatility, we've had inflation concerns. This week in particular, though, we had a big media deal on Monday. We all had to wrap our head around remembering that it was just Monday that it was announced. Then you had crypto plunging on Wednesday, bouncing back. It's under pressure again today. Retail earnings, there's just a lot being thrown at investors, and it does feel like we're taking a little bit of a breather today, a little bit of lighter volume. How do you see it? What is really driving the trade, particularly among equities?
Well, Carol, certainly a crazy week, and I would, even extend on it and say, that we had, crazy 6 months. And naturally, when you kind of just take the whole market performance into consideration from the performance of your average investor, the uptick that we have seen, has been happening so quickly and to such scale that we've been calling for some type of a correction, for some type of a pullback in the market for quite some time. And we started seeing these pullbacks, as early as February, March. We first saw the rotation out of the expensive areas and then, eventually out of small caps, and it seems to be like this type of market that there is going to be heightened volatility. But at the same time, all of this is happening within the larger context of economic recovery and this bull market that we believe that we find ourselves in.
So in a bull market, but also ready for a correction? I mean, when you're thinking about a correction here, what are you actually expecting?
So, Tim, bull markets tend to last for a while. Like, we have to remember that bull markets last for years. And
I mean, look at the one that lasted post-financial crisis.
Well, that's right. That's exactly right. That's a perfect example. And in any given year, over the last, several decades, the average pullback, the average correction, has been around 14%. So we think that it is absolutely reasonable that we will have, some type of a correction that could be anywhere from, let's say 10 to 15%. But we also don't believe that it's going to be long-lived. We're not looking at the recession. We're looking at the volatility. We're looking at market correcting itself, which is extremely healthy, at this point in time. But it also comes with buying opportunities. For investors, this is a great opportunity to rebalance portfolio and to take advantage of, some of this great positioning in this market.
So where are the problem pockets of the market, in your view?
Well, really, the problem packets are the overpriced securities. This is kind of something that is very easy to recognize in this market. When we look at the valuations, when we look at multiples, when, we look at the expected earnings, we see those troubled children. We know that when a stock or a certain sector went up, so much in the short time frame that it is reasonable to expect some type of a sell-off. And we're seeing a lot of rotation. We see that this type of rotation, is the theme going on, right? What we see right now is, opportunities and kind of like rotation almost back into reopening themes, right? Something like retail, consumer discretionary, or, semiconductors or fintech. So, we just have to be, conscious of this overpriced market areas. And specifically from the portfolio design.
What does that mean then? Just pare back or sit tight? What does it mean?
Well, I think pare back. So when we're looking within the portfolio design, right, when we're looking at certain sectors of our portfolios that have been so inflated because, particular areas, let's say technology, for example, right? If your normal allocation to technology is X, and all of a sudden it's twice that, because of such big appreciation, now would be a good time to rebalance and also really carefully evaluate that portfolio, because not all tech is created equal. If we take that sector, for example, we have to look at earnings and we have to look at forward-looking projections. This is very much a stock picker's market, in my opinion.
Gotta ask you about Bitcoin because it is down again more than 10% today. It has been a wild week for the cryptocurrency. A decline earlier this week in one day of more than 30% before it bounced back. How do you watch Bitcoin as an asset in terms of how it could, the risk-off trade from that could actually go into equity markets?
Well, Tim, it's certainly is a difficult area to address because there has been so much volatility. And I think that in the large scheme of things, the fact that we just recently started at really recognizing, that part of the market as an asset class, in itself is a really big development. And I think investors going into, the set of investments have to expect higher volatility. That's just a reality.
So favorite investment right now?
I would say that going forward, favorite areas are banks. Materials.
Okay.
Absolutely. Because, when you think about it, the one area that is not going to be a surprise for anyone are going to be higher rates. And maybe not right now, because absolutely, we all know it's not a surprise that Federal Reserve first and foremost is committed to seeing this economy all the way through recovery, but higher rates are coming. This is just real. We just don't know, how long it will take us to get there. And banks and, fintech, it's also, kind of just an area connected to it. They're positively correlated, with a higher rate environment. The same with materials. The other area of the market that we really like, quite frankly, any high quality, reasonably priced areas like healthcare. Healthcare is a perfect example. We see a lot of exciting opportunities.
So if a client comes to you right now and wants to get into the markets, and move over to you and they have a large amount of money, how do you advise them? Timing wise.
Exactly, Tim. I think that we have to take into consideration where we are. And with this bull market, right, but at the same time, with this great degree of volatility, we would advise them to dollar cost average into this market.
Like not over a year?
Over, I would say even shorter time frame. Let's say take a shorter time frame, like 6 months. because we don't want to miss this bull market either. We don't want to take such a long time to get in that we're missing all of those appreciation opportunities. But with expected volatility, I think that the key here is to be very selective when it comes to security selection and extremely disciplined, with going into this high quality areas and kind of, nice, high quality, well balanced portfolio will do the trick.
All right, we're going to leave it on that note. Katerina, thank you so much. Have a great weekend. Katerina Simonetti, she is Senior Vice President, Private Wealth Advisor at Morgan Stanley Private Wealth Management, joining us on the phone from Philadelphia. This, as we've really had kind of a day, some malaise, if you will, when it comes to the S&P 500 and NASDAQ in particular. The NASDAQ really the underperformer here among those major equity averages, just down about 0.5%. A little bit of a gain, though, in the Dow Jones Industrial Average. But, man, we're going to sum up the week in just a moment, because coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and on YouTube, counting you down to the closing bell on this Friday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Taylor Riggs, Caroline Hyde taking the day off, but not taking the day off. Our Beyond the Bell global simulcast team, Carol Massar and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences. Carol, quite an end to the week here.
Yeah, I think Caroline maybe is taking the day off because she's exhausted, because it's been a crazy week. I know. Long weekend. Listen, here we are going to finish near our lows of the day. And if I look for the week overall, guys, Dow and the S&P 500, they're down for the week overall just a little bit. And the NASDAQ just squeezing out a little bit of a gain there, Tim.
Yeah, it's like markets did a lot on some days, but by the end of the week, not much actually happened. If we take a deeper dive into the Bloomberg industry groups, we see kind of a half and half, red and green on the screen. Financials and utilities leading the way with information technology and consumer discretionary rounding out the bottom there.
And we were talking about the NASDAQ and the NASDAQ 100, of course, eking out a gain for the week. It's going to be the first in 5 weeks that we're actually going to post a gain. Don't let this week fool you, Romaine. Before this, you had 4 straight weeks of declines. And so you're wondering if this was a buying opportunity. And then how the heck did the NASDAQ climb back when I thought cryptocurrencies were the story of the week?
Yeah, well, I mean, it's a gain of about 0.1%. I hate to throw cold water on that, but you're talking about an index that still tested a lot of those key moving averages, still kind of camped out around that 100-day. So you have to kind of question, where's the trend line right now?
Well, what's interesting, too, is crypto, man. That was one of our big stories for the week overall. We just had a headline a few minutes ago about Bitcoin specifically. The decline that we saw in today's session extended to 10%. So continuing, Romaine, to see pressure.
All right, well, let's check in here on what's happening in the equity markets. We are getting the closing bells on this Friday, a beautiful day here in New York, 41.54 on the S&P 500. That's going to be down about 0.1%. Of course, it's going to take a couple seconds for all of this to shake out, so that could change. The NASDAQ composite right now down about 0.5%. That probably won't change. It is down on the day. The Dow Jones Industrial Average looks like it's going to finish higher on the day, up about 0.4%, right around 34,208. And as far as the Russell 2000, I believe the Russell is actually higher on the day by about 0.3%. We should point out both the Dow and the S&P are down on a weekly basis. The NASDAQ, Carol, is higher on a weekly basis.
I love that you said it's a beautiful day, because for some of the names, depending whether it was a particular retail company or if you look at the financials for the week overall, they actually, or I should say in the Friday session, did pretty well. So, it's one of those weeks, Taylor, where we saw whether it was jobless claims, whether it was the Fed minutes, whether it was crypto selling off, you had specific things that really determined the market direction.
How much of that came from bond yields? You mentioned the FOMC meeting minutes. What really stands out to me for our radio audience when we're taking a look at the sector level within the S&P 500, it's banks and it's dividends that are the big gainers, up 1.3%. As you've heard a lot about the financials really benefiting from this environment. As we heard on Wednesday, the FOMC finally saying that they might be now thinking about tapering. Everything else is pretty green, except for on the bottom of the screen, when we look about what is red, you have to say it, Caroline, a lot of this is tech, a lot of this is media. You did see some fallout from that big media merger that we saw on Monday.
Did you call me Caroline? I'm going to take that as a... No, it's a great compliment.
I'm tired. I'm sorry.
I am tired, too. I have a niece who's Caroline. She's named after me, so I love it. Hey, let's talk about some of the gainers here. NVIDIA, I love the chip names. Top in the S&P 500 and a top gainer in the NASDAQ 100. NVIDIA shares jumping after announcing a 4-for-1 stock split, so huge. That stock at its highs up more than 4%, but by the end of the day, up about 2.6%. 6%. Ford, it has been on such a run. I know. Which one? Ford, right?
Yeah, Ford is just amazing. I mean, not only that you got the 7% on your screen, up about 12, 13% on a weekly basis. This is one of the best weeks we've seen for the company, Carol.
Well, that's what you do when you, introduce an electric F-150. I mean, Romaine, have you put in your order? Because everybody else is putting in their order.
I'm
waiting on the Lambo.
It's only $100, I think, to put in the order. Actually, to get on that. Refundable, too.
Well, they've had some unbelievable order numbers. So that stock, as you said, quite a run. Boeing, I want to mention, that stock up about 3% here, planning its new 737 MAX output jump in late 2022. That's coming from Reuters. And then Deere, everybody, farmers, they're buying equipment. And it was up about 1.5%. They also lifted their profit outlook. Surging farm sector, Tim.
Oh, you got the gainers, Carol. I got the decliners. Let's start with VF Corp, down nearly 9% on the day today. This coming after fourth quarter earnings and adjusted gross margin that trailed analyst estimates. Applied Materials, we covered those earnings yesterday after the bell. Finishing the day today, down just about 1.2%. The stock, though, up more than 49% so far this year, so expectations have certainly been high. Seagate Technology was one of Carol's gainers earlier in the week, higher on crypto news, down today over 3%. It was downgraded to market perform from outperform at Northland. Discovery, Taylor, you mentioned the big media merger news of the weekend. Discovery down about 0.8%.
Imagine that was just 4 days ago, right?
I know. Four days going on 6 weeks is what it feels like. Finishing the week, though, down in double digits after Monday's news of its tie-up with AT&T.
Biggest news of the week, and they fall for 5 straight days.
Isn't that crazy? What does that mean? What does that tell us about investors?
Well, I know we're going to have a great conversation about that. I know AT&T got a few upgrades days. We further digest that news, but let's first digest where we are on the week for yields. And gosh, do I say it? Is it
you are tired?
1 basis
is this
point?
the same board we had
last
Friday?
Blink and you miss it. It looks
for our radio
like the
audiences,
same board.
we're looking at 162, basically 162 basis points on the 10-year yield. If you were tuning in last Friday, it was also at 162 basis points.
And you know what's crazy is we've had pretty much a 160 handle going back since March. I mean, we really haven't done much. Despite, Carol, what was so interesting Wednesday from the FOMC,
right?
I was so surprised how well behaved these bond markets were, given what in many analyst cases seemed to be a pivot from we're not even thinking about tapering, we're not even thinking about it, to we are thinking about having a discussion soon. And most of the analyst notes, Ellen Zettner of Morgan Stanley being one of them, saying we have now pulled forward our expectation of a taper and then eventually a rate hike.
So juxtapose that against the chart you just showed in terms of bond yields. And Romaine, you talking about we haven't seen much movement. And even with all the volatility in the equity markets this week, by the end of the week, we're little change. And it is interesting against the backdrop of more Fed speakers, Taylor, saying, well, maybe we need to be nimble. We heard that from Raphael Bostic. We're hearing people say maybe the Fed needs to start thinking about, what to do with that balance sheet.
Romaine, you were bringing up a smart conversation between Raphael Bostic. You heard from Kaplan and what seemed to be a change in tone from maybe more diverse members saying some are more hawkish, some are more dovish. Do you get mixed messaging, or is this part of the
I think the
bigger
fact that
strategy?
they're at least talking about it out loud, I think that seems to be the shift here, right? I mean, you have to assume these conversations have always taken place behind closed doors, but the fact that they feel comfortable now saying this publicly, I think it gives you some sense here. And just to your point too, Carol, though, I mean, what's going to drive the Fed ultimately is going to be really with the economic data. And I think a lot of people talk about how fast is the Fed is going to move. How fast is this economic data going to move? That's what, I mean, if you see that and those inflationary pressures come in, they got to do something.
You're so right. And think about when the weekly jobless claims number came out. It showed a big improvement in terms of claims coming down. I mean, that's what the Fed's going to be watching, right? They're going to be watching the labor market very, very closely when, Tim, all of those millions of jobs that were lost, whether they come back.
Well, that's the thing. I don't know how many times we have to hear it from Fed Chair Jerome Powell. That is what the number that they are watching. They want those more than 8 million people to get back to work. And the big question is when and to what extent we see wage inflation associated with that, or to what extent we have to wait until September when schools open up to actually get people back to work.
Yeah, and when we were talking about inflationary pressures, I mean, I want to touch on commodities here because that had sort of been the canary in the coal mine, at least a lot of people thought. The balloon came off of that rose really last week, and we saw another pullback in the Bloomberg Commodity Index this week here. Oil, of course, kind of in stasis right now as people sort of look and see what happens with Iran. But then, of course, you had the industrial metals kind of pull back, as well as the soft commodities here, Carol. So I'm not sure what that tells us, but at least in the short term, this gives a sense here that maybe it is transitory.
I think, Carol, one thing that really stood out to me was the note from the farmer who said, I've given up on wheat and I'm just going to corn because that's where all the money is.
Did you say you've given up on weed? Is that what you said, Taylor?
Wheat.
Oh, okay. Just checking out.
Oh my
I didn't know if there was a new commodity that I hadn't heard about.
It's family friendly.
Carol,
Thinking about the weekend.
It has been Friday. It's
not
been
nice.
It's been
Carol,
a crazy
speaking of that, what are you planning to do this weekend?
What am I going to, I'm going to spend some time. No, I'm not going to do that. I'm not going to do that. I'm going to talk about dating. Can we talk about dating and the White House? They are like going out to all of the dating apps, and basically you can put on it,
The
Tim.
White
I know
House?
you're off the market, Tim, but you can put out whether or not you've had your vaccine.
You
I
can.
think we're
Look, the
all
White
off
House.
the
The White
market.
House is working with private companies. They're working with Uber and Lyft to try to get people
just to
to
clarify that.
vaccine appointments and to get them their shots. They are also working with a host of dating apps, so you can get on those apps and you can say, "Hey, I've been vaccinated. You want to hang out?"
Am I going to get in huge trouble for saying this?
Oh my gosh.
Which part?
What did you say?
I mean, instead of doing a vaccine thing, can we just like an STD thing? Like, I don't care if you're vaccinated. I care if you have like huge other
And
issues.
you are like saying me about a family show and weed?
That took a turn.
Romaine is giving up.
Romaine's
Goodbye,
done.
Carol.
Romaine
Goodbye,
is done.
Tim. Have a wonderful weekend.
Goodbye,
guys too.
everybody. It's a Friday and it's been a long week. That's going to do it for our cross-platform coverage. Have a good weekend, everybody. We'll see you again on Monday, same time, same place.
This is Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
That was a crazy week.
It was a crazy
I know we
week.
got a little bit off the rails, so forgive us, everyone. But if you've had the week we've had, that's just kind of how it goes.
You know, we saw some wild moves in the equity markets, but for the week, Carol, you mentioned the numbers.
Yeah.
The Dow down just about half a percentage point. The S&P 500 down 0.4%. The Nasdaq eking out that little gain of 0.3%.
Well, and the chart that Taylor Riggs showed too on the TV side, really in terms of yields overall by the end of the week, that we haven't seen that much of a change, despite all of the gyrations that we saw, despite specific metrics, whether it was jobless claims or Fed minutes or crypto selling off, that did kind of move us, for moments in a day.
Yeah, looking at the price of Bitcoin right now, down more than 10.4%.
What are you going to do? What are you going to do this weekend?
We are going to visit friends for the first time who moved to Westchester County. We're spending the night there. We're all vaccinated. It's going to be fun.
Enjoy. Have a really good weekend. Enjoy.
too.
Special programming note, if you're listening in New York, Boston, Washington, D.C., or San Francisco, we're taking you to the Kiawah Island in South Carolina, home of this year's PGA Championship. Bloomberg Radio will bring you play-by-play today and all weekend long. We are now going to join coverage already in progress. All right, let's get a check of world and national news. We do that with Nancy Lyons in our 991 studio in Washington, D.C. Nance, take it away.
Thanks, Carol. President Joe Biden's team is offering to reduce his infrastructure and jobs plan by about a quarter to $1.7 trillion. It's a counterproposal that's still far higher than what Senate Republicans say they'd support. But Press Secretary Jen Psaki says it shows that the president is willing to compromise.
This proposal exhibits a willingness to come down in size, giving on some areas that are important to the president. Otherwise, they wouldn't have been in the proposal, while also staying firm in areas that are most vital to rebuilding our infrastructure and industries of the future.
Psaki says the new White House plan would shift spending on manufacturing, supply chains, small businesses, and R&D to other pieces of legislation that's being considered by Congress, including bills aimed at combating China's technology dominance and the global semiconductor shortage. Well, there are further signs the Trump Organization's chief financial officer may be ready to flip on the former president. Bloomberg's Ann Cates with the latest.
The former daughter-in-law of Alan Weisselberg tells CNN that she predicts he will cooperate with prosecutors on Trump after handling the organization's finances for over 40 years amid a criminal probe into his taxes. The New York Attorney General's office has been looking into the Trump Organization since 2019 over its finances and is working with the Manhattan District Attorney. Jennifer Weisselberg, who was married to his son Barry until 2018, has been cooperating with investigators. In Washington, Ann Cates, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, right here in our Interactive Brokers studio. And it's been a fascinating week with a lot of market gyrations. But our Business Weekend show features our interview with ARK Invest founder, CEO, and CIO Cathie Wood. She was with us from the Bloomberg Business Week live event. And in this excerpt, it was a long conversation, but in this excerpt, Cathie talks about the ecosystem of Bitcoin mining.
We believe that Bitcoin mining integrated into the distributed grid, and by that I mean solar roofs, power walls in homes, utilities, merchant power producers, starting to include Bitcoin mining in the ecosystem. Why would they do that? They would do it because renewables are intermittent power sources, right? Weather, is it sunny or not? Wind, is it windy or not? And Bitcoin mining could take off if there's excess energy from solar being loaded into power walls. It can be offloaded into Bitcoin mining, and the whole ecosystem, therefore, becomes much more economic. If this happens, we believe that the adoption of solar is going to accelerate dramatically because there's another profit center associated with it, Bitcoin mining.
All right, that, of course, was ARK Invest founder, CEO, and CIO Cathie Wood. She joined me at the Bloomberg Business Week live event, and there's a full conversation. We covered a lot of ground, talked for about a half an hour. You can hear more of that interview. It is in our Bloomberg Weekend show, starting tomorrow at 8 a.m. on Bloomberg Radio, and you can also check it out on our podcast feed at Bloomberg.com. The Bitcoin mining was a really fascinating part, really kind of getting into the explanation. She talked about her forecast of $500,000 for Bitcoin specifically. She's sticking by that forecast. She talked about Tesla specifically, which has been a really, really big investment. And she also talked about getting out of Apple specifically, really kind of wrapping up that position this week. So again, check it all out at Bloomberg Radio and at Bloomberg.com. You're listening to Bloomberg Business Week, and this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Bitcoin heads into the weekend in free fall again after a fresh warning from Chinese officials over cracking down on cryptocurrencies. Bitcoin right now is down by 11.95%. We have got the Dow higher today. S&P, NASDAQ both lower. Stocks mixed. Investors whipsawed in part by volatile trading in high-risk assets such as Bitcoin amid lingering concerns about the outlook for inflation. Oil rose for the first time in 4 trading sessions. West Texas Intermediate crude up 3.1%, $63.84 a barrel. The S&P down 0.1% to 4,155. The Dow ends the week at 34,207, up 123 points today, up by 0.4%. NASDAQ down Friday. It fell 64 points, down by about 0.5%. The NASDAQ 100 index down 0.6%. For the week, the S&P was down 0.4%, the Dow down 0.5%. NASDAQ this week, though, eked out a 0.3% gain. 10-year yield 1.62%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
So all this week we've been featuring segments from the Bloomberg Business Week live virtual event, part of the how-to issue of the magazine. This week's vertical was all about pursuits. And for that, I caught up with a dynamic duo. We're talking about John Varvatos. He's co-founder of Villa One Tequila with singer-songwriter Nick Jonas. They talked about how to start a tequila company. Here's a little taste of that discussion.
You've collaborated, the two of you, on things together. Was this just a natural progression? Talk to us about the relationship that the two of you have had. John, you want to start?
Yeah, Nick and I met probably 6 years ago at a dinner in New York, and supposed to bring in collaborators and creatives together and CEOs and that type of thing. But we ended up hanging out together the whole time, talking about music, fashion, our families, growing up in the worlds that we grew up in. And the next day, Nick called me and asked if I wanted to come to the studio to listen to some music that he was working on. And the night before, we had been sipping tequila throughout our conversation. And when I got to the studio, he kindly had another bottle of tequila sitting there. First thing we started to work on was a capsule collection that I did under my brand. And that was a lot of fun working with Nick and, really getting his point of view on things. And then we launched a fragrance that was kind of a crazy success, and we did a couple more. And while we were working on that, we were also working on the Jonas Brothers documentary. And but all of it kind of spent with a bit of tequila and enjoying those moments and reflecting on positive things in our lives and that type of thing. Nick, you want to take it from there?
After we kind of had established that we had this great creative flow together, we found ourselves in these great places, having these great life experiences. And there would usually be a glass of tequila in our hands. And it was something we both shared a passion for and wanted to learn more about, and kind of threw it out. What if we started our own brand? And what if we made something that we could bring the same level of care and focus and attention to detail that we bring to these other projects we've done together and the things that we do separately to a tequila brand. And so we built kind of a vision for it without having the liquid, the bottle, anything like that, but just a big dream and idea, and brought it into our partners at Stoli Group and presented them with this plan, and they loved the idea. And a couple weeks after we were on our way down to Mexico, we first stopped in Cabo, had a great night of great food, music, tequila, and we're trying to think of a name for the brand. We couldn't think of anything, but we knew that we wanted it to embody the feeling that we had that night, which was great experiences with great people. And I did a toast and said, to life as it should be, which then became kind of our motto for the brand. And the following day, we woke up a little bleary-eyed, probably, and looked at the placard on the door of the villa we were staying in, and it said Villa One. And so we solved our problem of not being able to come up with a name. Just loved the way that sounded and the experience we had there. And the next step was working on the juice. So we went down to Jalisco, Mexico, met with Arturo Fuentes, who is our master distiller. He's kind of a legend in that region. He is the godfather of tequila. He's worked on some incredible tequila brands and has a background in cognac and champagne. And so it was a really natural fit for us with him. And we got into the process of tasting tequilas and trying to decide kind of what we wanted it to taste like, and what the three expressions, the silver, reposado, and añejo, what they said as a collection of tequilas. And I think that the first thing for us was about finding something unique in the distilling process. And so what Arturo did was he combined the lowland agave with the highland agave, which gives it this very unique combination of the earthier notes from the lowland and the sweeter notes from the highland agaves. And we only know of one other brand that does this. So it gives it a really unique, fresh and smooth finish, along with, some more complex notes when you get into the reposado and the añejo, obviously aged in American oak barrels for 6 to 12 months, and then 12 months to 18 months, depending. But the silver, which is the one we're going to try today, is not aged. It's straight from the barrel, basically, and it's my favorite for mixing cocktails, which is something that I've gotten quite into during this quarantine time, getting creative with more time on my hands than I would have liked to have had. But it lends itself to some good cocktails.
It's been a crazy year, and I think we could all use a good toast. We've got a great group that's collected here. So maybe from each of you, John, do you have a toast for our audience?
I would say as, to everyone that's out there, better times are ahead, but let's support the others that aren't in the same place that we are right now.
I'll just add that, it's obviously been a tough year, and it continues to be tough. And as we talked about at the start of this chat, so many places globally being hit by this. And I think it's all of our responsibility to do all that we can to help those in need and that are suffering, and to thank those that have put themselves on the front lines to ensure the safety and health of others. And so to those going through the toughest of times, we support you. We're here for you. And to those who are doing the most good for those people, thank you. And to getting back to life as it should be someday in the near future.
Absolutely.
Cheers.
Absolutely.
Well said. The best to both of you.
That is yummy.
That was yummy. How to Start a Tequila Company with singer-songwriter Nick Jonas and his partner John Varvatos, of course, the fashion designer. They are co-founders of Villa One Tequila, and you can watch me actually make a cocktail. A Bloody Maria is what we made together with Nick and John at the Bloomberg Business Week event. You can just sign up at BloombergLive.com, get all the details, check it out at Bloomberg.com as well. All right, coming up, we're going to wrap up with what has been really one of the big topics of the week, and we're talking about cryptocurrencies. In particular, we're going to talk with Bobby Lee, an entrepreneur in the cryptocurrency space. He's joining us in just a moment on Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So the Bloomberg Galaxy Crypto Index, which includes a bunch of cryptocurrencies, was down 41% for the week overall. So a big move down. We had a wild run in cryptocurrencies this week. We're going to dig into that with Bobby Lee. He's an entrepreneur in the crypto space. So we'll talk to him. He's got a new book out, too, about the promise of Bitcoin. So we'll get to that in just a moment. In the meantime, let's get back to Charlie Pellet with a check on that trading day. Some of the news after the close. It was a crazy day.
It was a crazy day, swinging between gains and losses. A loss for the S&P, loss for NASDAQ. Turned out to be an update for the Dow Industrials. Got to begin with Bitcoin. I know you got more on that coming up in a moment. The selling continues right now with Bitcoin down today, right now lower by 10.4%. Bitcoin resuming its decline. Bottom line, though, as I mentioned, mixed Friday here, losing week for the S&P. Investors being whipsawed in part by volatile trading in high-risk assets such as Bitcoin amid lingering concerns about the outlook for inflation. Oil up for the first time in 4 trading sessions. West Texas Intermediate crude advancing today by 3%, ending the week 63.80 a barrel. Gold up 0.2%, $18.80 the ounce. 10-year yield 1.62%. S&P lower by 3, a drop of 0.1%. Dow Industrials up 123, higher by 0.4%. NASDAQ down 64 for the NASDAQ Composite Index, a drop today of 0.6%. Well, as for the overall market backdrop, Caterina Simonetti is Senior Vice President at Morgan Stanley Private Wealth Management, and she was our guest right here on Bloomberg Business Week.
The uptick that we have seen, has been happening so quickly and to such scale that we've been calling for some type of a correction, for some type of a pullback in the market for quite some time. And we started seeing this pullback, as early as February, March. We first saw the rotation out of the expensive areas and then, eventually out of small caps.
And again, it was a down day for the S&P, falling by 0.1%. She mentioned small caps. The Russell 2000 eked out a gain of 0.3%. Again, Bitcoin lower today by 10.7%. And some of the other stocks making news today, NVIDIA announcing that 4-for-1 split of 2.6% after earnings. Applied Materials down 1.3%. And Deere out with earnings this morning up by 1.3%. I'm Charlie Pellet. That, Carol, is a Bloomberg Business Flash.
It is. It's exactly how you do it, Charlie Pellet. Thank you so much. Well, we did say earlier we had a wild run in cryptocurrencies this week. If you've been listening to Bloomberg all week, sell off, bounce back down again today, as Charlie just mentioned. Bobby Lee is an entrepreneur in the cryptocurrency space, recently founded Ballet, where he is CEO as well. It is a multi-currency, non-electronic crypto wallet. He's also author of a book I've got in my hand, The Promise of Bitcoin, The Future of Money and How It Can Work for You. He joins us on the phone from Las Vegas. Bobby, nice to have you here on Bloomberg Business Week. How are you?
I'm good. Thank you for having me. Happy to join.
Well, it's great to have you here. It's been an interesting year on so many different levels. That's the understatement of the year as well. It's also been an interesting start to 2021 when it comes to cryptocurrencies. What do you make of the recent crypto mania? We had some selling, we had a bounce back, we had volatility. We're down again on crypto. Bitcoin was down about 10% or so. What's the outlook in your view?
Yeah, so first of all, the context is that this is a big bull market year for Bitcoin. If you look back a year ago, Bitcoin was roughly just a tenth of where it was today. It bottomed out at $30,000 in March, April of 2020, and now we're already over $30,000. In fact, we reached an all-time high of $63,000 last month. So with this context of the broader context of the bull market, we are seeing a temporary pullback. It did pull back quite ferociously. It fell by almost 50% from its all-time peak just in the last few days.
So does a run-up just mean, though, putting it in context, you said this is a big bull market for Bitcoin this year. Does a run-up in value just mean, does that somehow give something significance and relevance for the longer term?
It does, because as my book, I'm trying to position the way I explain it is Bitcoin is really a global reserve asset class. It started out as a very small sort of digital currency invented by Satoshi Nakamoto, sort of this very deep, very nerdy kind of cypherpunk kind of creation. But what we've come to see over the last 12 years is that Bitcoin really has a role in society in the sense that it truly is an independent digital asset class that has a strict limit on the issuance. So people may know Bitcoin has an ultimate cap of 21 million units. And with these two factors, the strict limit of 21 million and also its own sort of independence, decentralized nature, it's really a beast that cannot be controlled by the governments of the world. So it doesn't succumb itself to the inflation that we see with the US dollar and other currencies that's controlled by central bank printing. So now, Bitcoin has already reached $1 trillion in total value. It's come back down a bit in the recent pullback.
Right.
But I think it's going to go much, much higher than that.
We are still, though, Bobby, trying to figure out, is it a currency? Is it a commodity? Is it a collectible? I mean, we are still having these conversations. You do know, too, that the U.S. Treasury, the Federal Reserve are, increasing their curiosity and wanting to know more about it and trying to figure out what needs to be there in terms of oversight. Could that drastically change the dynamic of cryptocurrency as we see it today?
Well, so the number one misnomer is people misunderstand that currency has to be something that you can spend with in order for it to be valuable. I take a more traditional view. Currency is really money. And money, even if it's sitting in my pocket, even if it's sitting in my bank account, it's useful to me even if it's not spent. So this is the important piece. Cryptocurrency like Bitcoin, it doesn't have to be useful only for spending. It can be useful as an investment, as a hedge against inflation, as a store of value. And in that sense, I think Bitcoin will be very successful. And with regards to regulation, yes, they are very concerned about it because of its digital nature, of its so-called awesomeness, where it can be sent across the wire instantaneously all around the world. So it really is different from the traditional money in that sense. So that's why you have regulatory agencies all over the world trying to clamp down on Bitcoin. But fundamentally, Bitcoin as its own sort of digital currency, it hasn't changed. Even with basically no one can force to change it. Well, what the regulatory agency can do is force people's behavior to change around it rather than the Bitcoin itself.
All right, sit tight for a second. We're going to do a little bit of world news, world and national news, Bobby, and then we'll come back and continue the conversation because I am curious, in the book you talk about how, this will ultimately transform the global economy. And I'm curious when there are still people, really smart people coming up to me and saying, I don't understand it. I don't understand cryptocurrency. So looking forward to what you have to say about that. We're going to come back with Bobby Lee. As I mentioned, he's an entrepreneur in the crypto space, founded Ballet, where he is CEO as well, which is a multi-currency, non-electronic crypto wallet. He's also author of The Promise of Bitcoin, The Future of Money and How It Can Work for You. So we'll continue with him in just a moment. Right now, let's get another check on world and national news over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. 70 years ago, a young Army Ranger first lieutenant who was badly wounded leading troops on a Korean hilltop fending off a Chinese battalion, well, he received the Distinguished Service Cross. Today, President Biden awarded him the Medal of Honor. Bloomberg's Irv Chapman reports from Washington.
South Korean President Moon Jae-in arrived at the White House to confer with President Biden in time for the ceremony honoring retired Colonel Ralph Puckett.
The strength of the alliance between the United States and the Republic of Korea was born out of the courage, determination, sacrifice of the Korean troops fighting shoulder to shoulder with American troops.
Puckett went on to earn further honors fighting in Vietnam. In Washington, Irv Chapman, Bloomberg Radio.
The White House is pushing a new reason to swipe right. Dating apps are starting to offer incentives for people who've gotten their coronavirus shots.
These dating apps will now allow vaccinated people to display badges which show their vaccination status, filter specifically to see only people who are vaccinated, and offer premium content, details of which I cannot get into.
The administration's COVID coordinator, Andy Slavitt, says research indicates those who are vaccinated receive 14% more matches than people who are not. Texas Governor Greg Abbott's executive order that bans local governments and public schools from requiring masks goes into effect tonight. Entities that defy that order could face a fine up to $1,000. Texans can only be required to wear masks in businesses that require them. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. We're talking crypto. We're going to get back to that conversation in just a moment. That, you know, is also something of interest to Elon Musk. And our Bloomberg Business Week weekend show features an interview I did with ARK Invest founder, CEO, and CIO Cathie Wood from the live virtual Bloomberg Business Week, the Business Week event that happened this week. And in this excerpt, well, I talked with Cathie about specifically Tesla and its performance in China. Check it out.
I think the China is going to favor its local producers like NIO and others, XPeng. And I think they're granting subsidies to NIO, which is the battery swap company, even on its very high-end cars, which they are not granting to Tesla. So it's obvious, and it has always been obvious, that China would favor a local producer. But what we are seeing from China, and particularly Tesla, is exports into Europe. Where it does not yet have a plant. And what we're hearing is especially in Germany, but all over Europe, where their standards are extremely high for cars in terms of design and performance, that they would prefer cars from Shanghai, which is a much newer plant, and much more productive, much more efficient in terms of these perfecting these designs than is Fremont. And so I think we're seeing a big export market develop from China into Europe. And I think China will like that. China wants to be known not for shipping or exporting, cheap goods, but also high-end goods. So this could be the beginning of a trend.
All right, and that is our Bloomberg Business Week weekend show. A little clip of it from my interview with ARK Invest founder, CEO, and CIO Cathie Wood, which happened at the live virtual, the Bloomberg Business Week event that happened this week. You can hear more of that interview on our weekend show. It all begins at 8 a.m. on Bloomberg Radio, and also you can check out our podcast feed at Bloomberg.com. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bitcoin is heading into the weekend in free fall again after a fresh warning from Chinese officials over cracking down on cryptocurrencies. Bitcoin now lower by 10.6% at 35,819. The latest blow came when China's State Council reiterated its call to curtail Bitcoin mining and trading. We'll have more on Bitcoin coming up in just a moment with Bobby C. Lee, author of the book, The Promise of Bitcoin. Stocks mixed today after investors were whipsawed in part by that volatile trading in high-risk assets such as Bitcoin amid lingering concerns about the outlook for inflation. Oil rose for the first time in 4 trading sessions. S&P little changed after erasing earlier gains when Philadelphia Fed President Patrick Harker said the central bank should speak about reducing bond buying sooner rather than later. S&P down 3, a drop today of 0.1%. The Dow up 123, up 0.4. Nasdaq down 64, a drop of 0.5. 10-year yield 1.62%. Gold up 0.2%, $18.80 the ounce. West Texas Intermediate crude up 3.1%, $63.87 a barrel. Recapping, Bitcoin down 10.3%, S&P down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Do want to get back to our guest, Bobby C. Lee. He is, as I mentioned, an entrepreneur, understands the crypto space, founded Ballet. He is CEO there. He's also author of a new book, The Promise of Bitcoin, The Future of Money and How It Can Work for You. He's still with us on the phone from Las Vegas. So, Bobby, what do you do? I work with a lot of smart people. I run into a lot of smart people who are still like, I don't quite understand cryptocurrency. I don't understand it other than it's maybe, a place, a risky asset that you can just make some money or lose a lot of money as well. What do you say to them that ultimately will be, you say it's going to transform the global economy? How so?
Well, so a few things about those smart people. So a lot of smart people in the world, a lot of successful investors. However, even today, the vast majority of them don't understand and don't get Bitcoin. And this is the reason why I wrote the book. I'll give you an example. 10 years ago, when I first got in touch with Bitcoin, this is my 10th anniversary of being involved, I was a decently smart person, have a college degree, computer science and all that. But I was a novice, very newbie, if you will, in terms of understanding Bitcoin, the fundamentals, the philosophy, the economics, and also the technology. So today, Bitcoin is already 12 and a half years old. There's still a lot of smart people in the world, educated people who are very successful in their own right. But when they see Bitcoin for the first time, to them it's strange and it's just not, it doesn't grok. It doesn't really click in terms of what makes it so special. So that's fine. It's just that Bitcoin is very, very complicated. It took me a decade to really understand it to the level that I have so far, and I expect myself to really even learn more about it in the coming next decade. In terms of how it's going to change the world, what's amazing is that now for the first time in the world, we have a unique asset class that is digital in nature, that people can send around anywhere in the world, from person to person, without any third party's intervention, without any third party oversight. Now, from the regulator's perspective, when something has no oversight and no intervention ability, they worry. Naturally so they worry, because they're used to controlling things. They're used to controlling and seeing all the bank wire transfers. They're used to controlling how much money people can withdraw from their accounts. They're used to having limits and all that stuff, including trading hours, the stock markets. They're used to all that kind of control. But Bitcoin is so new and radically different, there's no way to control it. And that's how it was invented. It was invented to be this wild sort of animal that is not domesticated. So that's why it's so hard for the people around the world and the regulators to really understand it.
How does it become a bigger part of the mainstream financial global economy if it's expected to be this wild animal? Which is fine, but you got to know that going in. Yeah. But that sounds to me a bit problematic to fitting into kind of a stable system, especially if people are counting on it.
Well, first of all, yeah, absolutely, you're right. First of all, I'm not saying, nor are people saying that everyone has to use Bitcoin. Remember, this is not a forced sort of thing in the sense that we are not forcing the world to use Bitcoin and to get involved in Bitcoin. What it is Bitcoin is a choice. So So prior to 2009, prior to the invention of Bitcoin, people had no choice. If you want to send money to someone abroad, you had to go through the banking system, which is like a SWIFT international wire transfer. And there's all sorts of limits, all sorts of delays, all sorts of just critical stuff that's very complicated with the SWIFT wire transfer. Now, people had no choice. Whereas today, people have a choice now. People who want to get involved in cryptocurrency, they can choose to send the money in Bitcoin. They can also choose to receive the money in Bitcoin.
Right.
And don't forget, sending money, traditionally we talk about, the world is four-dimensional, right? When we talk about sending money, we think of it in the three dimensions, as in the physicality, sending it from one city to another city, another country.
Right.
But the fourth dimension, which is the dimension of time, is very, very important. Right? That's why we save money. The reason we have money in a bank account is because we chose to not spend it all on the day we earned it. That's an accumulation of the money in our individual bank accounts. So money, as we know it, is really the purpose is to spend it through time.
So let's say is this like if you're making an investment in something rather than X amount of days to clear or something, and we can get into a big discussion about somebody else having access to your money for a few days and making a lot of money on it at your expense. Are you saying that the real value in cryptocurrencies is you can make that purchase of, and maybe let's say another asset class in Bitcoin, and the transfer happens immediately?
Well, I'll make sure I understand your question. So, first of all, we're talking about Bitcoin more specifically than cryptocurrency broadly, because cryptocurrency broadly has many of the what we call alternate coins.
Right.
Many of them have promoters. They have all these crazy values, and I'm not a big supporter of those. My book is unashamedly about Bitcoin.
Right.
So, yeah, in terms of Bitcoin, you're talking about payments. This is one of the misnomers. People think Bitcoin is not useful. And again, these are the people who are interacting it for the first time. They challenge, they question why Bitcoin is useful when you can't pay for groceries, pay for your online shopping, you can't pay for your movie ticket in Bitcoin, right? Tesla just recently did a walk back on it. Tesla, in January, February, announced that you can buy Tesla cars with Bitcoin, and then just last week, Elon Musk said, nope, we're going to cancel that.
Right.
And the reason is, frankly speaking, nobody buys a Tesla with Bitcoin. Not in the right mind. I mean, who has a Bitcoin to buy a Tesla? So Bitcoin should be much more viewed as money, as an investment, as a vehicle to holding value, as opposed to the means of transaction as I'm going to buy my day-to-day spending with Bitcoin.
So
does that make sense?
Like gold? Like what's the
gold,
yeah, go ahead.
So gold is despite what the bankers and people try to say gold is not valuable, but the reality is governments all around the world still very much support and believe in gold. That's why they have thousands and thousands of tons of gold in their reserves. So Bitcoin is known as digital gold.
Right,
I know. Version of gold.
Well, we've only got about 40 seconds, left here, unfortunately. You'll have to come back and talk some more because this is a great conversation.
Of course.
I mean, so how will it impact most of us, or will it not impact most of us going forward? And again, just got about 40 seconds.
Oh, yeah. So that's the main question. So it can impact most of us if we choose to smartly invest in Bitcoin. If we choose to ignore it, then it's not going to impact you. On the other hand, you're going to be on the losing side because whatever money you have in the bank account, that's going to lose its purchasing power over time. However, if you choose to invest in Bitcoin, and this is why the subtitle is how it can work for you, then it will impact your life because now you've engaged your investment into this asset class that can give an amazing return in the next 10 to 15 to 20 years. For a long-term investment, I think Bitcoin is the best thing that's happened for all of us.
We're going to have to leave it on that note. Come back. I'm sure this is going to continue to be a big conversation, certainly here at Bloomberg, and something that our listeners and viewers on YouTube definitely want to hear about. Bobby Lee, he is founder and CEO of Ballet. It's a multi-currency, non-electronic crypto wallet, author of The Promise of Bitcoin, The Future of Money, and How It Can Work for You on the phone from Las Vegas. Folks, that's going to do it for a wild week. Check out our Bloomberg Business Week podcast on Bloomberg Radio tomorrow at 8 a.m. and go to Bloomberg.com for all of our conversations. For the whole Bloomberg Business Week team, have a great weekend. This is Bloomberg.